Good evening, everyone. I am CA Shreyash Yadav, and I welcome you all to yet another webinar on compliance and audit in the digital era, opportunities and challenges, organized by Internal Audit Standard Board of ICAI and hosted by Jalgaon branch of WIRC of ICAI. Before we start, I would like to welcome CA Vicky Birla sir, Chairman of Jalgaon branch WIRC of the ICAI for opening remarks. Vicky sir.
Yes. Thank you, sir. Good evening, everyone. I, CA Vicky Birla, on behalf of Jalgaon branch of WIRC and Internal Audit Standard Board of ICI, welcome each and everyone present for this webinar. I would like to present hearty welcome to our learned and esteemed speakers, Professor Alok Pandey sir, CA Shiv Gupta sir, CA Dinesh Bansal sir, and CA Harpreet Singh sir. I would like to specially thank CA Charanjot Singh Nanda sir, our beloved CCM and Chairman of Internal Audit Standard Board of ICI, and CA Gyanchand Mishra sir, our beloved CCM and Vice Chairman of Internal Audit Standard Board of ICI for organizing this much needed webinar, and also thankful them that they have given the chance Jalgaon branch to host this webinar. Thanks to Mr. Krishnan CA sir for being the panel coordinator. I also welcome all the participants in this webinar. And coming to today's topic, compliance and audit in digital era, opportunities and challenges. So we have two parts. On one hand we have opportunities and second one we have challenges. Respected members, we are all living in digital era, isn't it? And Corona has perfectly taught us the importance and best utilization of technology in our life. And we have to admit that in today's world, compliance and auditing is not a simple task. We are living in digital era and in era of artificial intelligence. So auditing and compliance is very big challenge. You just can't work with our traditional methods. But it is correctly said that bigger the challenge is, we will have bigger and better opportunities. So we all have to understand this that this digitization is definitely creating challenges and hurdles in our professional work. But contrary, on the same hand, it is creating numerous new avenues and opportunities for all of us. So as an auditor, we must find answer to how to audit the new technologies like blockchain, robots, AI machines, cryptocurrencies in order to keep up with the quality of the audit. And to grab all these opportunities, we must acquire new skill sets. And this transformation of India towards digitization can be seen as an opportunity for all of us. And our alma mater ICI is always future ready for all of us. And that's why Institute has started courses like FFD, VISA, and Institute also taking numerous seminars and webinars like this. So we need to rethink our audit approaches and possibly our profession as a whole. It will be crucial for all of us to keep up with the digital change, to understand the impact, and to have the technical competence to deal with it. We must therefore define a digital strategy to have explore, and we have to do much more experiments. We should partner with others and we should train and transform our staff and people. So we can drive a culture of innovation and digitization for betterment of our profession. So this is the conclusion which we will have to take from this webinar. Our esteemed speakers and panelists will guide you for this. So I conclude this. So thank you for giving me a chance to speak in front of such great personalities and amazing audience. Thank you very much. Over to you, sir.
Thank you so much, Vicky sir. I would like to inform the panelists that CA Charanjot Singh Nanda sir cannot join right now because he's traveling, and for the betterment of student he is attending an international conference for the students of ICAI. So he would be joining in the end of the session. He will come around 8 p.m. So now moving forward, we will now begin our technical sessions. Today we have with us Professor Alok Pandey sir, Dean of GD Goenka University, Chairman of Index Advisory Committee MCX India Limited, and Independent Director CSC E-Governance Services India Limited. Apart from his current position of Dean, he has served the Institute of Cost Accountants of India ICMAI as a Director in Advanced Studies and at the Institute of Management Studies Ghaziabad as its Director and CEO. We also have CA Shiv Gupta sir, Director of Finance, Asia Pacific Apply Board. He is a chartered accountant with 20 plus years of industry experience. He is also a certified public accountant from USA. He has previously worked with many multinational companies and has rich experience in all aspects of finance while while enabling the business growth. We also have with us CA Dinesh Bansal sir, Group Head Audit and Corporate Strategy, East India Udyog Limited. Dinesh sir is also a chartered accountant having over 15 plus years of wide experience in internal auditing assurance, business process design, governance, internal controls, process and system audits, projects audit, risk management and assessment, fraud investigation and prevention. We also have with us CA Harpreet Singh sir, President and Credit Head of Yes Bank Limited. CA Harpreet Singh sir has more than 2 decades of diversified experience in BFSI space, mainly in MSME, emerging corporates and mortgages lending across the regions, both on relationship and credit side. He also worked in large corporate project finance groups for reputed NBFC. He was also awarded superstar performance and became part of talent pool team. We also have with us Mr. Krishnan CA sir, Senior Vice President and Global Head of Tech Mahindra. Krishnan sir is the Senior Vice President and CDO of XDS unit at Tech Mahindra. He is responsible for delivering digital transformation for global clients through human-centered, purpose-driven experiences, helping them establish competitive dominance in their respective markets. Now would like to ask Krishnan sir to take the technical sessions forward.
Am I audible?
Yes, sir, you are audible, sir.
Excellent. So thanks for that very warm introduction, and I'm so very happy that ICAI has set up and invited us to this very interesting topic. Clearly, as we all know, our lives have changed due to digital transformation. The COVID has only accelerated the adoption of digital by companies worldwide. And I'm quite excited to be chairing this panel and moderating this panel with some of the big names in academia and the corporate world. And on one hand, from an academic perspective, I think it's going to be very, very exciting for me to call out what is the art of the possible, and then intersperse it with what is practically doable by getting the practitioner's viewpoint. And in the intersection of both these is what I would say is the key insight from this webinar. And I'm quite excited that we will try and accomplish that in the next couple of hours. I have broadly going to touch upon 7 key areas. We'll start off by having a broad perspective of how digital is transforming businesses and specifically the audit and compliance function. And then we will move on to look at it more from an industry lens, taking some feedback from some of the top industries that we touch. And then we will look at this topic from a stakeholder perspective, how this digital is transforming the lives of CXOs and specific unit heads, and more specifically people who drive compliance and audit in organization. And then the fourth key dimension that I will try and call out from the panel members is looking at regulations, because whatever we try to do, whatever is a set of opportunities, it has to be understood from the context of the regulation and regulatory requirements. And then we will go deep dive into what are specific challenges, what are specific opportunities that digital has created in the lives of various stakeholders, specifically in internal audit and compliance. While we can talk about whatever is the opportunities, it is also important that many digital transformation in my experience has failed worldwide. And clearly, the technology is not the panacea for all problems. So I want to definitely at this point take some views in the sixth dimension of this topic to look at what is inhibiting adoption in organization, because technology is known to all of us, but clearly we see that there is a gap between what is possible and what we see getting adopted in organizations. So we'll try to get some perspective around it. And then finally, uh, any new technology, it is never the question of what can be done. Mostly technology can solve pretty much all problems, but we have to look at all of this from a risk and mitigation standpoint, because technology, while there are a lot of positives, it does create challenges. So what are they? And then get into a deep dive into some of them. And then finally, I would like to summarize the key takeaway from this session. So this is how we're going to drive it in the next couple of hours. And let me start off by throwing the question to Shiv. So Shiv, today, if you see, before we start looking at compliance and audit, could you give a brief idea about how you see digital transforming businesses in general? What has changed? Maybe with that, we can begin the panel discussion. Over to you, Shiv.
Sure. Thank you. Thank you so much, Krishnan. And thank you, Mr. Vicky. Thank you, Mr. Nanda, while he's not there. But I think it's an honor and a great opportunity for me, and I am sure all the other panelists will resonate the same. So ICAI is like our the alma mater, I would say, the apex body for us professionals. So I think it's an honor to speak an event organized by ICAI. And I'm really excited with the topic as well, and as Krishnan highlighted. So I think digital transformation, technological transformation is very critical these days, and it is not only impacting, I would say, the audit and compliances or the business. It is actually impacting our day-to-day life as well. And what best we have, like I can talk about it more than what any of us have really experienced in last couple of years. Even my 5-year-old son, he has got nothing to do with the technology, but even his school, which was like I would say a playground for him, comes into a technology mode and comes into a Zoom call or into a Microsoft Teams call. So that's how the digital transformation, the digital technology has changed everything, right from our day-to-day life or our kids' life to complex situations in business as well as in the audit and compliance world. So what is digital transformation? I think if I just summarize it in a very simple way, it is nothing but the integration of digital technology in all areas of business. And it basically fundamentally changed how one operate, how a business operate and deliver value to the customers. Right from maybe, let's say, thinking about what we are doing to the customers, or maybe, let's say, a sales function to a delivery function, even coming back to our core finance and audit and functions. I think everything has changed. And it's not only the change in terms of the operations or the business activities, but it's also a big cultural change among the organization. Every individual, as I said, is impacted. So it is basically requires the organization to continuously challenge the status quo, experiment new things, and get comfortable with the new technologies, even sometimes face the failure and sometimes you get the success. So, but it has completely changed the operation as well as the cultural fabric of an organization. It has been gaining momentum for last few years. I would say it's not that it has just come like yesterday, but COVID-19, as Krishnan mentioned, has really pushed it many years ahead. If COVID-19 was not there, maybe probably we were what we are achieved or what we have, where we have advanced today in terms of digital transformation, we could be doing probably after 3 years or 4 years or 5 years. So it has really sped up the COVID-19 has sped up the transformation. And now I think there are many reasons a business do digital transformation, or even to that matter, audit and compliance world also do the transformation. But I think the key reason that I would say in today's scenario, it is nothing but a survival issue. So you really don't have any option. If you don't transform yourself in this digital era, you'll be gone. So we have seen many organizations which were doing like great. They were number one in their respective businesses, but they couldn't comprehend the changes in the technology. They were not as I would say fast in adapting to new technologies as they should have been. Nokia is a good example. Kodak is a good example. So it is very, very important now, and as I said, it's a survival issue. So everything is impacted. We don't have really any option but to adapt quickly to the digital transformation, be it in the supply chain side or in the time to market or go to market. Even the customer expectation is really, really changing in this scenario. Now, customer is no more that you even let's say it's, on the customer experience side, the customer has raised a complaint and you'll take like 10 days to respond to that. All those days have gone. With the digital transformation, with the technology, this is nothing but a very fast and dynamic world. Another important thing is it's not only the existing businesses which have been transformed or which have been changed by the digital transformation. Digital transformation or technological inventions have actually given birth to some of the new businesses as well, which we have not seen earlier, be it an internet driven business or internet of things. So there are many, many new areas that have come up, even on the data security, on the privacy. There's a lot of activities that are happening, so which have given a lot of new opportunities to the businesses to redo their things or even offer some value add services. So I think that's broadly, I would say, a brief landscape of the digital transformation that we have seen or we are going to see in near future.
Yeah, thanks, Shiv. That's very nicely put. It gives us the canvas to talk further. And as you rightly said, no business, no function has not been touched by digital, right? And now I want to take some views from Professor Alok. Now, with the larger context of digital, transforming lives, making it easier, certain industries are adopting this much faster than others. Certain functions are adopting it much faster than others. And there is hesitation too. So given this context, Professor Alok, how is digital era changing and impacting specifically the topic for today, the internal audit and compliance function? Your thoughts, sir, please. We're not able to hear you. I think you need to unmute yourself, Professor Alok.
So, namaskar to all. I thank you, Mr. Krishnan, and everybody, Mr. Gupta, Mr. Vicky Birla. I think it's an interesting topic to look at, and I'm thankful to you for having done some due diligence prior to the exercise, and making us feel better about how this particular topic can be dealt with, because there's a lot of talk on statutory audit all the time. And the external audit, they call it. In fact, you'll find so many textbooks on external audit, but there'll be just a small few pages somewhere on internal audit. And it's a good step by the Institute of Chartered Accountants of India to have set up this internal audit standards board. Now, these are times where you have, processing speed rising manyfold, in a given year. The computers are becoming faster. The computers, in fact, not just computers, with a large number of interventions by the governments around the world, we are now moving to 5G speeds. So in a short span of time, you will have 5G speeds in this country. And that would lead to changes in everything. The way people look at businesses would change. Today, if you look at the way a young person who's 14-year-old, my son, tracks products, the way he wishes to buy products, the way he wishes to feel products, the way he wishes to, the idea of going to a showroom and learning about it is now gone. So the brick and mortar businesses have, a lot at stake. So with metaverse coming in, you will have people actually sitting in their boardrooms, probably if Meta would have come in, all of us would have been seeing each other, in a metaverse and talking to each other as if we are physically there. So, these are very difficult times. I was actually looking at some of the data set on the part. Let me just share my screen for a minute and show you a diagram. And I've got, can you see this screen here?
Yes, if you can put it on presentation mode, it will be more visible.
Is it visible?
It's
now?
Visible, but not on. Yeah, now it is on. Yeah, we can see.
So largely this whole idea that, the effect of, as you say, that how things are going to change, these are some of the pointers, several surveys and other things. And I thank the Deloitte for doing a lot of good work on these dimensions. I picked up some material from there and from research papers here and there, because it's very difficult to find as to how internal audit actually functions. Now, the whole idea is that the way internal audit had been seen, there's a statement, by Robert Cobb. It says, if you can't show through an audit trail how you arrived at the numbers on your balance sheets, then you must have committed there must be some significant failure in your internal control process. So if you show me a balance sheet, you need to tell me as to where these numbers came from. And there has to be some idea as to how things work. So, the internal audit process itself with changing times has changed. The idea is that today, we don't, majority of the people have the bookkeeping process and accounting process embedded into their computer systems and the ERP processes, right? And it is the role of the auditor to understand how, the numbers have worked. An auditor, in any case, needs to stand in front of the board, the audit committee, and tell them that, yes, everything was fine before they identify the flaws in the balance sheet or whatever, and the external audit does the job. So, some of the things which have come in post-digitized world are, for example, this agile internal audit. It's picked up from project management. Agile would mean that, it's picked up from software project management, actually, where, you keep talking to people continuously. When you do talk continuously to people, you continuously learn, unlearn, and relearn. Alvin Toffler. So when you look at that, so you identify that, yes, my process, internal audit process, I was doing this, and this needs to change here, and this needs to change here. So there have to be people. So something drastically changes in the business environment. Like, for example, I'll discuss that later on also, the new Data Protection Act, the bill which has been tabled, which will be tabled in the next session of Parliament. Right now, this is going to change the way you look at businesses, because a lot is going to change. So what will happen is that as you get into this, you need to be much faster than usual in terms of the audit process, the internal audit process. Remember, you are actually a value. You're talking about a value chain. Your internal audit is something which acts as the eyes and ears to the management when something needs to change. If something is reported that something is flawed, the internal auditor comes in. I've been sitting for almost 6 years now. This is my 6th year. I had a 5-year tenure initially with a company. It's a government company. And then they gave me 5 more years, till 2027. And I was happy actually because the CAG also audits the company. Right. So I was happy. I was not sure that, they'll not put me in some kind of a trouble. Right. And I realized that the way internal auditors function conventionally has to change in India, especially. So, the agile internal audit is one of the ideas. Similarly, the idea of workforce of the future. If you look at the workforce of the future, now majority of the company are doing contractual work. And as you do the digital era, majority of IT companies are into it. As more and more, you look at this whole idea of moonlighting. Look at the whole idea of people not part of my company still working for me. Is it? Now, how does an internal auditor keep a check on it? What kind of HR processes work there? Integrated assurance. Another major area is integrated assurance. Now, we've been looking at very divided idea of assurance in companies. There is one part general insurance. There is another part enterprise risk management. there is other part, regulatory compliances, right? And all of them act, in silos. Now, when systems are getting integrated through an ERP system, through cloud-controlled systems, the companies have websites which represent them, not just buildings. Almost every aspect of the company needs to be integrated. So there has been a lot of talk on combined assurance systems, a lot of case studies being published by people, how combined assurance systems or integrated assurance systems work, where the board itself takes a view on how to reduce the overall cost of assurance being paid by the company. In fact, if you have an integrated assurance approach, the companies will have a fair amount of cost savings. And in digital world, often it is something where, you have this issue. Other, similar is the automating insurance. Now, computer systems, they'll come in and they'll put an enterprise risk management system, whether it is ISO 31000 or, the other processes. Now, the point would be that, you have to work out a plan where in this digital world, similarly, this Data Protection Act, GDPR is the, when they did the study, it was the data protection regulations of the EU. Now we have our own Personal Data Protection Act, which is going to come in. So, cyber internal audit, how do you really look at your processes? How does the cloud function in an organization? Can the internal auditor look into it? How the processes are being used? So, a majority of the technologies which have come in are disruptive in nature. Do they affect us positively or negatively? What are the risks associated? So for an internal auditor, in last 5 or 7 years, the job has become much more tedious. And that's where the role of, as we'll cover, as we have discussed earlier, for the benefit of the audience, because this is a training session for the budding auditors and chartered accountants. So latest technologies like robotic process automations or cognitive intelligence, the way it is used in systems, can I reduce my workforce and put an artificial intelligence system to read the material, reams and reams of material given by the company to me? Yes, I can. I don't need to have people looking at those material. I can have intelligent softwares who can read it out for me and identify. Today, you've got variety of computer systems available where the human element is minimized in terms of converting data into some kind of a decision for me. So I think as you look into these ideas, the world has become more complex. It's not just for the external audit part. It is also for the internal auditor, where the entire process is going to change. Similarly, is the continuous risk assessment. If you look at continuous, today, the risk assessment is not, one board meeting and the next board meeting. It has to be ingrained into the company, and the internal auditor has to play a role. He cannot come to the board and say, well, I did this, and, you have to do 4 audit committee meetings in a year, and, you will come and tell me that, yes, everything was fine. So today, the internal auditor has to be on the job. Let me tell you, in India, conventionally, the companies are still not utilizing the power of internal audit for continuous risk assessment. And that is where, in the digital world, we have to actually start doing it. So that is what I have to say now. And let us see that, as the discussion unfolds, we have several other dimensions of this. We will discuss that.
Very well said, Professor Lok. And, you have so neatly summarized how it impacts. And if I were to just, use one word, it would be, how do we do more with less, and use a very different lens to start looking at an organization, because an organization that used to function in a certain way few years back no longer functions in that way. Technology has permeated, and hence it creates new dimensions for internal auditors to look at and rejig the way that they do their work, right? And as you rightly said, AI, RPA can simplify things, do it much faster, much more automated, with less errors, and also have a much more better and wider coverage. So with that, I want to shift to another dimension of this. What is the opportunity here? Because we can always keep saying that, if there is a significant impact for digital technologies, but let's, talk about opportunities. What are the top 3 or 4 key opportunities for people who handle this function for organizations. And I would like to throw this and get some perspective from Harpreet.
Thank you, Krishnan. In fact, I must appreciate, I would just like to say that the way Alok ji has summarized and knitted the internal audit, touched based with how the technology advantage can be brought, and the way you were also mentioning, I think it's a time to do more with less. Possibly, when we look at the opportunities, the most important thing is towards the advantages that it actually has brought into our entire scheme of things. The most important thing, which I call actually, is TCC: time, cost, and convenience. So digital has actually cut down our time. Speed is the key today. Everything is real time, over the counter. You really want everything spontaneous. And on the cost side, I think cost is important to build on profitabilities. We are actually seeing all the companies facing huge pressure on building on profitability, especially post-COVID era. So technology is helping because it has actually become an integral part today. Earlier, we used to always say that technology is actually a support function or a facilitation function. Today, what happens is whenever you are even laying down any business line, actually it becomes the first talking point that even if you have to design a product, you have to start a business unit, or you have to do something else, some most important thing is your digital architecture, so that you are able to sync everything together and you are able to bring efficiency into your business. So when you are talking about the business opportunities, in fact, I was just thinking of today, the kind of businesses which were not even into existence pre-COVID or pre-digitization. I still remember that all business houses, right from Ambani, Tata, Birla, even small businesses, everybody is busy today finding out to put the entire business into an internet portal so that the convenience and the accessibility is across the globe. One of the beautiful example of an opportunity is here, that we all from different corners of country, I'm connecting from Aurangabad, from somebody from Gurgaon, somebody from Delhi. So we are connected towards one of the business opportunity which has come in terms of teaching. You can find a lot of business which have prospered. This is one of the biggest business which has come actually post-COVID from digitization, is that, coaching center, institute, so many, even internationally, all the institute have started, offering courses at damn cheap price. And they have actually, the best part is that they are able to have opportunity in terms of both the sides. The students are able to get that accessibility at a lower cost. At the same time, the colleges are able to have a wider reach. At the same time, in terms of all businesses, they are available on a click of a button today. And everybody is even thinking one step ahead. They want everything to be not even being restricted to our internet portal, but be available on a button of your mobile. You can buy things. Aggregators have come into role play for everything. Even government has started, playing a critical role in collaborating all of them to fix a point where all of them come at one particular common place and they are able to get that convenience. So same thing, I'll come back to my TCC, which is cut down on time, your cost, and your convenience. And at the same time, I think Alok sir and even Shiv had mentioned that it has actually become a survival game. If you really want to be, continuing with your business, you can't do it without digital. AI, artificial intelligence. It has, in fact, predictive analytics is playing a bigger role. Gone are those days when we were thinking of getting data, past data analysis. We are now predicting the behavior of a customer. Everything is being fetched. You can, kind of cross-correlate all buying patterns of customer. You can have access to the customer's financials through auto fetch, which is available today, obviously with the permission of the client. You get to know what he's actually preferring to buying in future. And accordingly, you can customize, bring that product and help him get that right product, even when he might not be immediately buying it. And then you create a compulsion for customer to buy it. So that's the beauty of it. In fact, while to touch base it along with audit, because the central theme is audit and compliance, I can tell you that during COVID, one of the biggest challenge was there to go at a remote places and do audit. Only with digital, the softwares today allow us to at our convenience, without any logistic travel cost, you can from right corner with the help of AI and software do a better efficient audit sitting at your place. So again, time, cost, and convenience. All three are there. You are able to do that remote audits from that places. Another thing is, in fact, when you look at, I was from a banking sector. When I talk about, one of the things that people used to earlier approach the bank for a loan. Today it happens you get a pre-approved loan applications. And then you start thinking, okay, I have this loan already, which I can use it for my car, for buying a house or whatever. How is that happening is all with the help of the digital space. So I'm sure business opportunities which have been there is almost in all across sectors, and they are in fact many mushrooming in terms of all business units. You can see that coming in a multifold area, and all are bringing common advantage in terms of, and when I also talk about, I think in terms of accuracy, efficiency. Again, on the audit piece, I remember that we used to always think of that, we will take some sample for audit because of the constraints. But the entire universe become a sample for you today. And you can have the efficiency even better than what you were doing for that sample, 100%. So that's again an opportunity for you where you are able to increase, widen the extent of your reach and your overall audit space, and you are able to give many more advisory services in terms of helping customer to identify their weaknesses. You are not only restricting in terms of helping, identifying the problems and, able to see where exact the problem is. So the multifold areas of opportunities have come in terms of digital space.
No, well said, Harpreet. And I think one of the key takeaways from this webinar, surely that the audience must be wondering, is TCC, right? Nice way to, and one of the things that I want to just highlight there is, earlier TCC used to be conflicting with each other, right? If you optimize on two variables, then the third variable cannot be optimized. But digital is changing that. You can optimize on all three variables and create, as you said, it's a question of survival. In fact, earlier today, I was reading a Wall Street Journal article which talked about, the recession coming in and which are the types of job functions that are, having the greatest risk of impact. And clearly the shared services, back office functions are, seeing a greater amount of impact than, other functions. So it's a question of survival. And I'm very happy that we started this webinar by setting the broad canvas of how businesses are getting transformed by digital. Because many times I've seen that, we straight away get into the topic without understanding the context of what's happening. But anything that we discuss in this webinar or any other webinar has to be seen and understood from the larger context. And I hope that, we have set that larger context around, as Professor Alok said, around, speed which connectivity creates. As Harpreet said, the TCC, time, cost, convenience, and look at how this digital era is creating a, very different landscape for internal auditors who handle the compliance function in an organization. It clearly requires a rethink. Now let's move to the second part, the second section. As I mentioned, there are 7 sections. So as we covered the larger landscape and canvas, I want to quickly get some views on specific industries because, even though this is a horizontal function, this function changes its color, based on the industry in which it's applied, right? And I want to invite the views of Mr. Dinesh, who has had significant experience in the EPC, which is engineering, procurement, and construction industry. So Dinesh, given this broader context, how has this changed in your specific industry? Could you throw some lights on, how digital impacts the specific sector, and what are the sectoral concerns or sectoral concerns that people need to bear in mind as they look to understand the impact and tap into the opportunities?
Yeah, sure. Thanks, Krishnan. So for EPC industry, digital transformation, I feel, is utilizing power of digital technologies to make operations more efficient, productive, and safe. Digital technologies can be both introduced at the management level and even at the site level where project is getting executed. Now let's discuss few challenges of this industry. In EPC, companies works with many small and medium-sized contractors and suppliers. Implementing digital technologies in this case becomes a challenge, often because the contract periods are short. And another factor is the cost. These suppliers works on a small margin and cannot spare the cost for expensive technologies. Or so from audit perspective, the whatever information required pertaining to these contractors are again manual records which are maintained by them since decades. Another challenge is being nature of an industry, material is one of the major component of overall project cost. So somewhere it is 60 to 70% of the total project cost. So considering the overall impact, this needs a complete safe storage at sites backed by logistics for frequent stock movement from the stores to the various sites and all. So proper planning, software for recording the movements and consumption of materials are few prerequisites for safeguarding of this major cost component. Another challenge for this industry is the survey. Survey is basically done initially when project is awarded, so or maybe at the time of tendering. So survey of sites needs to be executed. It is very crucial, and if it's not done effectively in beginning, may lead to huge financial impact for the company. So like if it is not done initially, then there might be surprises when project is awarded. So the costing which was considered initially at the time of making a tendering is might change substantially if the things is different at site. So survey is one of the important, and even in this case, getting audit trail is challenge for if either survey has been conducted properly or not. So from audit perspective, getting a audit trail is a challenge for auditor. EPC industry is another is also labor intensive, and hence managing labor compliances manually is big challenge when especially when different sites are running and even certain times contractors deploy daily wage workers for execution of work. Other few peculiar unique challenges are like abnormal delays, or maybe these are risks and challenges pertaining to these industries are abnormal delays in billing to client against work already delivered. Sometimes instances identified by auditors that billing even not done where which lead to revenue loss to the company. So work is already delivered, but billing has not been done. There are frequent instances of material theft from remote sites. It's again in nature of this industry. Duplicate billing by subcontractor against work already claimed either intentionally or unintentionally. The work is completed, the billing is raised by the subcontractor to the company, but after some time for the same work, in another bill they claim the same against the same work. So it's a twice billing, or maybe sometimes it intentionally or unintentionally, it depends case to case, but it's a risk. So which cannot be tracked unless you have a proper software. Another peculiar challenge is the squandered subcontractor. We need to deploy lots of subcontractors for executing the work at site. So all of a sudden, we come to know that subcontractor become absconded, who is even holding the valuable material issued by company for the execution. There is a challenge of labor unions, local unions, or influence of subcontractors, which causes threat to operations sometimes in case of any dispute with them. It is of any reason. Another challenge is risk of project may goes into loss, which may be due to the uncontrolled expenditure or procurement at higher rates than estimated at the time of tendering. This might be due to some uncontrollable factor as well, maybe which are external, such as war, pandemic, or we recently seen the war of Russia and Ukraine, where the raw material prices of all the metals, touched the sky. So which is something is beyond the control of the company, and sometimes it impacted the profitability of EPC company. Supply of material at site beyond BOQ. It is basically bill of quantity which is issued by client. This again might be due to uncontrollable tracking on quantity delivered time to time during project tenure. So basically it depends on the project size, and it sometimes project goes from 1 year to 3 or 5 years in completion, depending on the size and the locations, the geographical things and all. So during this period, if properly control over the quantities issued time to time is not done by the central purchase team or something like that, which obviously is a challenge if you are handling this manually. So it will lead to a huge loss for the company. So now let's discuss few technologies. So nowadays, by using high-tech devices such as laser scanners or laser distance meters, the field workers can gather essential data without risking their lives. So as Harpreet also mentioned that the audit of remote site can be done by sitting at your office. So these are the few devices which can be used maybe for identifying the local areas and how the geographies and all. There are small devices such as sensors and monitoring systems which can be used to reduce waste on the project site and to reduce the even carbon footprint. There's a artificial intelligence technology which can be used to make better building designs and also can be used to automate repetitive tasks to increase the productivity and bring more efficiency. Nowadays, there is geolocation such as Google Map, which is used for identification of dangerous areas, which is possible now, and workers can be notified before they even enter in that location. This also helps to address challenge of site survey, which I described earlier. Now there are options of smart machinery, which is available and which can maintain themselves. For example, a cement mixer can order cement automatically when it runs low, while ultimately helps to ensure uninterrupted execution of work. So at last, I would like to mention that during this digital era, combination of industry-specific software and tools duly integrated with their company's ERP system can work as game changers to overcome most of these challenges.
No, very well said. And as you spoke, Dinesh, I could see the level of knowledge that you carry in the industry. And I always, I've been in the technology industry for many decades now. And one of the best vantage points for me is I get to work with almost 40 industries and sub-industries. And the best part about working in such a wide variety of domains and sub-domains is that there is always something to learn, right, from an industry and how you apply that in a different industry context. And why that is important, I believe, is if you look at the larger digital era, the industry boundaries are blurring. In fact, somebody tried to do the valuation of Tesla, and no matter how hard they tried, they were unable to justify the valuation. So everybody was scratching their head. How come Tesla is valued at what it is today? And then they realized that if you value Tesla as an automotive player, then you won't be able to justify the valuation. If you start looking at Tesla as a cross-industry tech platform, which is what it is, right from energy to automotive, then you are able to justify the valuation.
Right.
So I think it's very, very important that, as we learn and go deep dive into this, we look at various industry perspective, deep dive into it, and not restrict ourselves to, okay, I'm in this industry, in this firm, so I'll restrict myself to that. No, we need to always have a broader view. And with that broader view, we will be able to, identify greater pockets where internal audit can play a more critical role, as Professor Alok mentioned a while back. And with this, I want to shift the focus to one of the largest spenders and most critical industry, which is the BFSI, banking, financial services, and insurance. And I want to get quick thoughts from Harpreet, who has been in this industry for a very, very, very long time. Again, from a domain side, Harpreet, how internal audit function is getting changed in the banking industry. What is your perspective? I know you briefly touched upon some of the use cases earlier, but if you could take us a little bit more deeper into it.
So, in fact, Krishnan, if I talk about banking financial service industry, I think it has completely changed. If you see last one decade, if we look at last one decade has shown us almost, if not more than 3 or 4 phases of very large, revolutionary change. We have shifted from our traditional banking, then we came at mobile banking, which again was a very big change where, everything was coming in mobile and, everybody started looking at, again, those points of able to have that digital space. And now with AI and the digital setup coming in, it's a a next level of kind of a revolution, I would say, because now fintech is the space. Finance plus technology, fintech is becomes a very, very powerful thing, because now when you are dealing with money, it gives you the entire fuel. And if that fuel comes to you on instant basis, I think you can see how much energy and power it gives to your entire sectors, industry, and every way. So what I have seen in last 1 decade happening is that if I talk particularly on the lending space, it has been completely changed. I still remember a time when you apply for any credit lending thing and you have to submit a plethora of information. So like you have always, from the customer perspective, you will think that you will always be kind of compiling the information. The list will be too long, and you will always take almost like more than many days, if not a week. And then couple of time, and then when you are submitting the information, and then that processing time will again take a lot of time. And when that processing has happened, then the decisioning and the final sanction and the disbursement, I always thought of not just being from a banker side, but from a customer perspective, that it would take nothing less than some couple of weeks for you to even think of taking a loan and then finally getting that money in your hand. And in between, if I take you some 5 years back, we could always expect that, okay, it has been curtailed to an extent where you can curtail those months to weeks and weeks to days. With the fintech coming in, nothing talking about days, not even hours, not even minutes, now has become everything is being talked either in seconds or on the spot. This is the kind of revolution that has been there in banking in terms of the financial technology applications. And that has been possible only with this AI, robotics, chatbots, where you are able to get everything right instantly, not even bothering a customer. I already shared in my previous discussion that today you don't even need to go back to the customer to asking him for providing information. Today, there are auto fetch features wherein with permissions, you can directly get into the portals of income tax to fetch the income tax financials. You can directly get into the banking space and pull out with a link directly the bank statements. You have the possibility of even getting the behavioral pattern from customers' credit card buying pattern through his entire scheme of things. And when you pull out, and that's where I was even saying that you are in a position to predict a customer behavior and provide him that entire scheme of things, even when he was not even anticipating that I would need this kind of, and this kind of revolution has happened in the banking space. So in this era, customer connect obviously becomes a little less, because you really don't need to connect to the customer. So when I talk about positive and the flip side of it, I was in one of the banking financial meet, in a bankers meet, where we were talking about if we are going to use this robotics and AI, are we foreseeing a future where we don't need bankers? Are we getting into a kind of a scheme of things where actually everything will be robotics only? Then will there be a need of anybody to deal with the customer? But then it puts back to us to a question that we are dealing with human beings. So when we are dealing with human beings, we need to have that connect. We need to have that relationship. We need to have that engagement. We need to have that touch and feel and all of that stuff. So I have always been telling people, coming from that banking space, that although this digital transformation is there and going to be there, it is going to make us more efficient in our working. It is going to make that big with less. But at the same time, that human touch, that relationship, that engagement, that connect has to be there. And definitely that is somewhere, I find in the banking scheme of things, people who sometimes feel that, okay, I think we can do away with that part, is not going to be there for some part of businesses where you have to have that relationship side, that one part. While you have also asked me to also touch upon how this auditing space has been affected, I was sharing a couple of things, because, audit again has completely transformed totally. Right from the kind of methodology, the approach, the tools being used, and even in terms of the end-to-end technology frameworks have changed. Why? Because now you have, you're not using your traditional way of doing things. When your entire business is run on BREs, when you're using business rule engines, you're really not keeping those hard files. Everything is on scanned or maybe auto fetch. And, the onboarding system is actually not manuals, and ultimate disbursals are happening through machines. Now your tools also have to be technically equipped. So on that part, one of the important thing is that the audit also becomes digital. One of the remote audit, I told you that softwares are being used to make it efficient. So where you really don't need to go at site and do the audits. Same way your end-to-end and the entire universe becomes a sample for you, where the efficiency is definitely going to be there. So audit has also parallelly transformed along with the way the business have changed. So banking, financial services has really transformed at the same time. Since the business has got transformed, the entire scheme of doing audit has also transformed itself in a big way. There are definitely flip sides to each of the eight, and most important thing is now is to have efficient tool to make sure that you are able to do the right audit.
No, very well said, Harpreet. And as you were talking, I was thinking about, what is a bank, right? Today, banking permeates everything that we do. And another very important aspect that you touched upon, which also leads me to the next question to Professor Alok, is we can keep going and looking at industry, but if all of us have seen Matrix, the movie Matrix, which came out, ultimately it is about data. Every function is getting permeated in terms of how data is collated, and finally audit and compliance is all about managing this data. Data is the new oil. And I want to turn to Professor Alok. If I look at a company and the data and analytics, how data and analytics is impacting the internal audit and compliance function, what are the opportunities it's creating, and if you could share some perspective around it, Professor Alok.
Now, as Harpreet said, let me tell you, financial services sector is the first one to not just go digital, digitize systems. They are the first one to get to audit also, which is digitally most effective there. If you look at the way systems work today, the government went on amalgamating several banks, public sector. What was the basis? Simple. Which technology platforms, which banks used? Later on, what we found that people smooth. Initially there was some issues, but it was the technology platforms. The decision making was based on the fact that yes, if Oriental Bank of Commerce and Punjab National Bank, they tend to use similar ERP system, similar banking software, which runs their banking systems, then they can be easily amalgamated. Now, the globally, in fact, majority of the banks and financial, not just banks, insurance companies. Remember, the role of audit is immense in financial services sector. And they also have the maximum amount of data. Which are the biggest markets in the world? These are interest rate markets. These are, traded derivative contracts. These are, trading on precious metal. All of them which happens through organized exchanges. And all of it creates a lot of data. And then you've got traders who need to be audited. I don't know if the students who are here or the professionals, they must look into the Nick Leeson case, which is seen as one of the major operational risk in the global financial markets. He took a position and nobody audited him. He took a position assuming that the markets are going to go up someday, and then one day the markets fell because of a Kobe earthquake, 1995, and the futures market, Japanese, the Nikkei future index actually fell. he took further positions, assuming that the market is going to recover. The market never recovered. Nobody came to know. And the auditors were silent. And ultimately, the Barings Bank, the 30-year-old bank collapsed. So banks basically have learned a lot in terms of managing their processes, and a lot of tools everywhere are used. Today, whether it is tracking your employees' travel costs, whether identifying whether there is some kind of a procurement fraud, there's some unusual behavior which is being seen in organizations. So in the financial services sector has come up as one of the major leaders as far as the internal audit processes in digital format in a digitalized world have happened. Not just this, if you look at the government of India, if there is one department, I'll rank two departments which stand first in terms of functioning in this country. The one is Ministry of Service Transport, which is roads and highways, and we lay down. Mr. Bansal would agree with me. We are one of the fastest laying down. We're laying roads to the tune of 3 to 5 to 7 kilometers per day. In this country, and the second one is Ministry of Electronics and Information Technology. So we have the largest broadband system in the country. We have the largest mobile phone network in the country, and majority of things. Now, when companies basically want to utilize your data, and the government also does it, in fact, now even in government educational institutions, employees are using, biometric attendance. If you look at the auditing of the Aadhaar-based systems, majority of the frauds in the government system are basically caught using analytics. And they basically have been able to do it only because the systems were digitized. Otherwise, they used to say that if you transfer 1 rupee, only 10 paisa reaches the beneficiary. Look at the direct benefit transfer, DBTs. So majority of the activities which have happened. So, what has happened is, one part is that you should have a data model. And most companies have a data model, and they integrate that data model, with some particular software. And, whether it is human resource data set, whether it is operational data sets, all the data sets are integrated and new data models are created so that the data is read carefully. So this is one of the tools which most companies use. Today, you can't cheat any company. Today, earlier you used to have systems where employees would not be present in the offices and they would be marked present. Today, that's not possible. You slowly are going to go and, and say the purchase processes, human resource processes, procure, the marketing and sales processes. You got to identify whether your employees are working or not. The systems are there. You automatically, if the employee has not logged in at a particular point of time, you're from a tech company. What do you do? You know that whether the employee is on the system or not, you've already integrated it. So similarly is, the variety of predictive analytics models today in financial service sector, the companies can easily predict what is going to happen with this particular loan. The credit risk analytics. So you've got a lot of data set which is linked to it. If somebody takes a loan, they know this guy is going to return it. Let me tell you, 5 years ago, people had said that Mudra loans are not going to fail because data tells us, the Bangladesh Grameen Bank example, that in Bangladesh, the micro loan succeeded. And least NPA in this country is today, the recent report suggests, is on Mudra loans. And this is power of predictive analytics. So most bankers using this idea would actually give smaller ticket size loans. And they will definitely have the loan coming back. Data visualization. One of the key things which board now has as an internal control tool is data visualization. So created, right? People know, as even if the CEO or a managing director is not tech savvy, the dashboard makes him tech savvy. It is the role of the internal auditor and it is the duty of the internal control process to ensure that the CEO or a managing director knows what he wishes to know. Even if he is unable to analyze the data himself, the computer should work out a plan. It should give him the visuals in terms of the results he wants. And that's how the system actually works. We all know that, if you have to run a system, not everybody could be as tech savvy as, some IT engineer would be. I can tell you, majority of the algorithmic trading processes which SEBI regularly audits, they are created by IT engineers who are fresh out of college, who have no idea as to what stock trading is all about. And with close to 1 billion orders being punched on the National Stock Exchange, how does SEBI come to know there's something wrong? The processes are so strong. We've got this whole fiasco of National Stock Exchange, the co-location problem which has happened. So audit happens everywhere, and you are able to visualize as to, yes, something's wrong somewhere, and you are able to take a decision on that. Again, robotic process automations. If you look at the systems, the way they have developed today, programming can be done about a particular behavior. If I do something 100 times, 500 times, 1,000 times, I'm dead sure to be doing it 1,001 times. So the fact is that they are going to identify this and put it in a program. So I won't waste my human resource in doing a repetitive task, and I'll be able to do a control check or some kind of a regulatory reporting or a compliance thing very easily. So if there's a compliance report to be generated, why should people go and do it? You train your systems in a manner that, yes, on a regular basis, for example, in stock markets, on a regular basis, there is a check that something is happening. Well, the orders are being punched wrongly, or somebody is trying to take advantage of the data sets. And all of it basically is because, stock exchanges are self-regulatory organizations like banks. They're SROs. So what really happens is, again, what has happened is that you've now got systems which can convert your text, into data, written material that is converted to data. They call it natural language generation and natural language processing part, NLPs and NLGs. So what happens, whatever information comes, it is not essential that you should have hard data with you. You can convert text into information. You can look at the leading information which comes out of reports generated, and you can quickly take an action. So largely what is happening is that sales reports can be converted to data on which I can identify what is wrong here. Largely similarly, say machine learning processes like robotic process automations. So fraud analysis can be done easily by using the machine learning processes. So in a digitized world, what is going to happen is that human beings have to now become a little more careful. And as more and more today, let me tell you, today you can't go to a bank and the bank manager cannot give you a loan. No. The idea is not just the behavior of the bank manager is under on which he is taking a decision is also, already known to the system, and he'll say that, no, you can't.
Are we able to hear Professor Alok, Dinesh, Harpreet?
No.
I think some tech issue with Alok Pandeyji connection.
Yeah, it is at his end probably.
Yeah. But just to, as Professor Alok joins back, I think it's a very well, brought up point by Professor Alok that today, as I look at, what he said, the audit function is becoming less of a manual and more of, defining, as Harpreet said, BRE, business rules engine. Algorithmically defined what are the failure points. Because as I was seeing one of the reports, the data that has been created in the last 5 years is more than the data that has been created in the entire humanity. So there is clearly a data explosion, and it's no way possible to do this manually. And in one of the reports I was reading that 70% of the work is actually manual, which definitely has an opportunity to automate and reduce the load on internal auditors so that they can focus on more intellectual part of the exercise on defining the rules that can catch this early on, and defining the bots, and defining the robotic process automation software to do the manual convert manual into automated tasks which are repetitive, which I think is a significant opportunity that Professor Alok was highlighting. Professor Alok, are you back? I do see you back. We lost you because of your connection.
I think I almost finished for what I was trying to say.
Okay.
That, these are the techniques and tools. Only thing which I wish to add that now for the auditors in this new world, you need to have new data sets. You need to have traditional CA backgrounds would work, but now a CA also has to understand algorithms a bit. What the CA Institute, I've already worked with one statutory body as Director of Advanced Studies 10 years back in my early part of career. I was very young, and I got the senior most position in a statutory body. And I learned the ways of the world, and I'd gone from academics into that.
I think we again lost Professor, right, Alok? Shiv?
Yes. I think technical.
Yeah,
glitch.
that's right.
So
Yeah.
this also gives us a reflection on the technical and technology side of it. Anyways, I think
So that can be counted as one of the challenge actually.
Yeah, and it also offers me an opportunity to reflect, because many times in these conferences, we keep hearing the thought leaders, but information is important, but it is also important to reflect on what Professor Alok was saying, and which is so true, right? That today we look at every function, but we all need to be technocrats. And I mean, for my own personal example, the first time I heard about robotic process automation, I was so curious that I actually went and downloaded the software. And it is so easy, you can actually, it's not that difficult for somebody smart to just, download it and create a bot. And I automated few functions. It was quite easy and doable, which I think is what Professor Alok is mentioning. And I completely agree, right? We should start looking at ourselves and equipping ourselves with the latest knowledge, which I think this forum provides, but also, tinker around, because it's, today things are becoming very simple. And it really doesn't require a technologist to do, some of the things that earlier required them. But let me move on to the next question, which I've been pondering on, which is looking at the stakeholder view around this. Specifically, this function ultimately rolls up into the CRO or the CFO. So, from a CFO perspective, from the internal finance and compliance and risk perspective, and also from a perspective of external auditors and consultants who advise firms. So how has this role changed? And maybe I could get some perspective from Shiv on this important dimension. How should we look at it from a stakeholder view? We have our internal bosses to satisfy, but also external eyes continuously looking and monitoring our firm. So what role does each of these stakeholders play? And how has technology, changed and redefined their roles, Shiv?
Sure. So I think maybe you refer to two dimensions of it, Krishnan. One is obviously towards the CFO of the particular business, and the second is towards the external stakeholders, be it in the auditor or the consultants. So I think if we talk about CFO, so not only in the digital era, but otherwise also, I think of late we all can see the CFO's role has dramatically changed. It is no more a person or a position that is basically concerned with numbers. Hey, you have spent this much, or you have not spent this much. So the CFO has really become an enabler over the period, and it is one of the critical. In many of the companies, you will see CFO's position is like the number 2 position in the organization, just after the CEO. So from that perspective, I think one quote or example that I have seen, some of my business leaders seen, they consider the CFO as a North Star. So basically, business is always passionate. The CEO or the sales head, your the CMO, they will always be passionate and they'll always look to do things. But CFO is the one who is kind of, while supporting the growth, while supporting the business, kind of maintains a check on everyone what they are doing. So that becomes very important. And now in the digital transformation situation also, that particular role of CFO is equally important. Like you might be looking to do a multiple digital transformation in the organization, be it the way the business is being done, be it in the internal processes. But CFO, I think, with the rest of the senior management, is responsible to ensure that there is a structured plan, there is an highest possible return on investment, because ultimately everything boils down to the return on investment or the ROI. And especially from the CFO perspective, let's say who is working in the organization to maximize the wealth of the shareholders. So that becomes very, very critical. So I think, and in this digital transformation, CFO is really, really critical to ensure that. Then simultaneously, the other thing a CFO is expected to play is that while he's supporting the business growth and he's supporting the digital transformation, but he's ensuring the compliance with the law of the land as well, because that becomes very, very important. You might be growing, you might be doing businesses, but if you have issues in your compliances, so you are not only it could not only be a challenge from the regulatory authority perspective, but it could be a big challenge from your customers, your partners perspective as well. No company or no business would like to work with someone who has issues in the compliances. So I think here the CFO's role become much, much more critical, that while everything is being transformed, everything is being digitized, as let's say we talk a lot about the banking and the financial services sector. While everything is fine, we have converted all those manual signatures to probably scanned documents or the digital KYC. But if the regulatory part is not taken care, then I think that becomes like a bigger pain point than the ease of business that we are looking to give it to the customer. So I think CFO has a critical role to play on that. And coming back to the external stakeholders, so I think everyone is impacted. Like we have been talking since beginning that it's not only one function or one individual who is being impacted with the digital transformation. So like if I'm as a service provider, I'm providing some services to a business, and if that business is transforming, then I really can't survive unless I transform along. And as Dinesh gave the example that some of the service provider or some of the partners are these days integrated. So let's say if we take an example of probably a manufacturing chain, so all the suppliers of raw material are integrated with the production line. And if whenever you see there is an like a minimum order quantity as hit, or then there's an automatic placement of order. So if these are external stakeholders, even on the consultant side, if you're not really able to understand the technology, if you're not really able to gear up to the transformation that your client is doing, then you'll be probably of no use to them. And gradually you could be literally out of the business. So again, it comes to the point that it's a survival issue even for the external stakeholders also. Coming specifically to like one of the key topic that we are discussing is the internal audit. So internal auditor again has to really transform the way they are doing the audit. So they might want to like reduce their stress from maybe doing some of the manual accuracy check they were doing, or reviewing the physical documentation. So they have to completely change their mindset and align with the revised or the digitized business processes of the client. And ultimately, they have to ensure that they understand and maybe they use the digital tools available. Even there could be a risk scoping that they can do based on the some of the digital use and some of the technical use using the probably the enterprise risk planning or some other tools. So everything really has to be transformed, and internal audit has to ensure that they are working as an enabler to the business, and they have to literally change that mindset that they are not a thief catcher. So probably that was the kind of traditional approach it might be there in the historical days, but that's not going to work. So everybody and everything has to change.
No, very well said, Shiv. And I really like the point that you mentioned that, from a CFO perspective, it's not just about growth and EBITDAs, it's about risk. It's about the organizational positioning in the market. And today, if you look at the valuation of companies, it's not just about the financial performance. I've been quite fortunate in my career to work with two of the finest brands in the country, the Tata Group, and now I am with the Mahindra Group, both known for trust and compliance. And with that, I want to get Professor Alok's view on risk and compliance, because ultimately it is about risk and compliance, right? And how does this change? How important it is, and especially in the digital era, if you could highlight, Alok, how things have changed and what are the things that we need to focus to maintain the highest proprietary and highest level of diligence when it comes to risk and corporate governance. Professor Alok, I guess you're on mute.
No, I'll finish my last point. I'm sorry for the last point which I missed. One of the key things is that we need to change our the way we teach accountants, and we need to change the way accountants think they have to function. They were functioning in a particular manner once upon a time. People would go and identify the information inside an organization, try to convert that data into information and information into books of accounts, and these will be probably audited and by somebody else, and then they'll finally come out with something on which decision the stakeholders would take decisions. So one of the ideas which I feel is that most people have to work. When I researched on this particular topic, I was looking at one of the ideas that people have to be looking at 3-4 broad ideas from computer science. One is called a root cause analysis, where most people in those who are programmers in your company, probably they basically go and identify what is the basic problem based on which they can create an algorithm and solve something. So the accountants have to think in those terms. The other one is exception routines. When something goes wrong, how do you handle it? So a program doesn't function. How do I really handle it? How does one look into the issues of supervision and control in the new area, right? So the fact is that if you look at this whole idea, I would say that the processes, the way they function, they are done by these auditors, and they have to really look at it. So whether it is the compliance part, whether it is the accounting part, the auditing part, or compliance part, everywhere you can't really keep saying that now a chartered accountant can depend upon information given by somebody else. He now has to play a bigger role, considering that the way governance systems have changed over a period of time. In fact, I would bring you back to my earlier idea as to how compliance happens. In fact, partially your answer on your data is the new oil. You said that, and how does it change? So partially, I have given the answer to this in my previous, detailed answer, that, how compliance and internal audit is changing. Now, the companies are no longer dependent upon human beings to get answers of a fraud. If you do anything wrong, I have systems available where I can check things have gone wrong. Look at the Satyam scam, for example. The Satyam scam happened because you were able to ensure that fictitious employees are not discovered by the system. And the gentleman at the helm of affairs was able to withdraw a fair amount of money from the system. Look at the way how people encash their employee stock options when companies are about to fail. Look at how some of the major bank failures have been detected. Most of them have some or the other root in the modern systems of compliance, which are based on how data sets and their unusual behavior is detected by people. So the answer to this idea lies in the previous thing, when we were talking about how In fact, if you look at the way risk and governance, this functions today, let me just share a diagram with you. I was looking at this, and I'll just share a diagram with you on this, how this governance part also gets added to it. Let me just share a screen and show you something. And there are two parts of it. This is the uh, governance issue. Now, is it visible?
Yes, it is.
I've got some, this is, if you look at the governance part of it today, compliance, governance, as just now Shiv had spoken on this particular issue as to what do we expect. Today, what has happened, this is the diagram which I feel should be viewed as one of the basic. I actually, being part of academics, I keep surfing through a lot of research papers who give me some of the other visual ideas. I teach basically derivatives and investments, corporate finance and international finance. And of course, being on the board of a company also gives me some idea that don't look at every research paper which tries to befool you through data. Look at only those research papers who basically try to help you learn something. So some of the research papers I found out were about, how does this entire system of, compliance, governance, and risk management works in the modern era. Now, if you look at the way this works, that you've got an audit committee. We have 4 meetings in a year with audit committee. Lots of papers were available. The performance of audit committee with relating it to the firm value and other things. I'll discuss that a little later. But the entire framework today is largely based on the fact that the information and transparency, the improvements in management, the accountability and legal framework, they basically would be supported by the audit committee, and this becomes a key committee for governance. In fact, I was looking at some of the data from Institute of Internal Auditors yesterday, and while I was doing it, I took some pictures on my mobile of some of the points the gentleman was sharing, and I think this will be what they say, that the new framework actually has internal audit committee, executive management, and external audit as 4 pillars of corporate governance. Right? So you take these 4, and once they function well, you will be in a position, and this has come over a period of time. In fact, look at the way several corporate governance committees have functioned, and they have identified how things work. So what I will say, that the answers to these questions, whether whether it is about compliance, whether it is about governance, it basically comes out of the fact that the internal audit function is much more organized today. The only thing is that companies have to realize that the planning, monitoring, the right-hand side of the picture, execution and reporting happens and is regularly consulted with the audit committee, right? And if you the audit committee can regularly review the performance, then things would be all right. And we can avoid a lot of trouble for the organization. Now, look at the way business environment is functioning today. You've got companies, tech companies, you talked about valuation. Majority of the tech companies which are running on a fuel provided by, angel investors, they do not have revenues. They do not have, profits. They don't show any profits. They're all showing valuations without any performance. And, despite whatever method, and majority of these startups actually close down, the moment the funds dry up. So the fact is that who loses? The shareholder loses. The key loser in the entire process. Look at the fiascos last year of all the new tech companies which issued their shares, which are running at a discount. Now, suddenly we find out that, yes, there were several internal controls which were missing. And these clues have to be, these clues have to be brought together by the internal audit function and the internal control function, so that now, even if it is about Paytm or Nykaa or whatever we say, these companies they have a problem. Bharat Pay, for example, the most talked about idea. The fact is that someone who's sitting on the board, somebody who is the CFO, he himself is accused of, a fraud by the organization and the promoters, right? So somewhere we look into it in a digital scenario. These things are easily lined up. As I said, through the technology platforms, through whatever I said at that particular point of time, through proper data management, through using right predictive analytics, through some kind of a data visualization techniques, the robotic process automations. So all these things, natural language processing, all these things basically come into the compliance part, and as well as the role of audit committee. Of course, the external audit equally would be important, because they ultimately will be held accountable if things go wrong. Today, things have become very difficult for the chartered accountants. The entire scenario is such that the chartered accountants, they have to, on one side, they have to fend for their survival. On the other hand, they have the challenges of getting wrong data sets. They have to do what the client says. So somewhere down the line, the internal auditor plays a role, and they can be of great help for the external auditor in this particular process.
So well said, Professor Alok. In fact, I want to call it out for those who have joined this webinar. Is the first time we were preparing for this talk. Professor Alok did clearly say that he wants to look at the latest research. And thanks for bringing this out, Professor Alok. As they say, a picture is worth 1,000 words. And I've also been very fortunate to study in IIM Ahmedabad. And one of the case studies that we looked at is the Enron scandal. And ultimately, if I were to summarize it in one word, it is about the culture. It is about the compliance and the governance to stand up when things go wrong and create that transparent environment where they highlight what they see and call a spade, right? And when the culture doesn't support that, it's always down south after that. So thanks for highlighting some very, very important aspects. And the other thing that I take away from what you mentioned is that always have the systems thinking, right? Don't look at your function in silo, because it is the devil is not just in the detail, but also it's in the in between of multiple functions. So you always have a very systemic and a system thinking. Look at the entire organization, see how things are moving. And as you rightly said, today sometimes things are so crazy about valuation that many of these very critical functions get overlooked, while they might be very lucrative in the short term. But I've never seen a business succeed in the long term when they take shortcuts. So it is definitely very important that CAs and auditors take view of that and always look at the firm's interest from a long-term perspective. And
I'll just intervene, Krishnan. One thing which I forgot to share was, on the, I think, this particular idea, I'll just share once again one particular diagram, which those who are viewing it will find it useful. If you look at this idea, today the internal audit methodology has to be learned by people who are not just part of the audit team, but also external auditors. It's a thing which has to be, almost every stakeholder has to come together for this. As I said, the 4 pillars, they have to come together for this. Say, for example, they say co-develop expectation, develop risk model and universe, develop audit plan, design audit project work plan, execute audit project work plan, and deliver results and insight. So, this is something which basically is now the new internal audit methodology, and people who are studying to become auditors and those who wish to pursue a career, it's a fantastic idea. If they take the stakeholders together and follow a particular idea, today the life becomes easier for the end shareholder.
No, very well said. I think the structured approach, many times, only when you put it on paper, you see that, how each of these functions kind of reinforce and synergize between each other, right? So thanks for that. And next, I want to take some perspective from Harpreet in terms of specifically on the regulatory response, because one is how digital changes, but it's very, very important to keep abreast with the regulatory response in this area. So Harpreet, over to you to share your perspective on this.
So, Krishnan, in fact, on the regulatory response, what I would say is that in my personal experience, in fact, what I have been envisaging and I have been experiencing is the response from the regulatory aspect has really been encouraging, because what we can also see is they are not only revamping, adopting the digital infrastructure, kind of change inside, but also are also encouraging all the ecosystem also to adopt to the similar change, because there are two important aspects. One is that, the major part when we look at businesses, for example, all sorts of approvals, kind of tendering system, when we look at the tax infrastructure, the overall landscape of things, like when we talk about SMEs, emerging, kind of companies who are coming up into the tax, ambit, all have been supported through this digital infrastructure change, where the response of regulator has really been very impressive. How, and I'll just share, you can see today, one of the most challenge being faced by people was in terms of filing for tenders, approvals, classification certificates. They would, again, same way as the bank processing was so tedious, on the regulatory side, it was even more tedious. The best part that has been brought, especially by the government and the regulator, is to bring transparency. And now it has, the single window clearance scheme in most of the businesses has been done through digital architecture, which is really helping most of the business. And now when we look at, even on, if I were to say on the judiciary side, that's again come on the regulator perspective, you see all, hearings even, right from the lower courts up till Supreme Courts are happening digital. So there are two things that are happening. One is that the adoption inside on the government architecture, at the same time helping, supporting, encouraging all the company stakeholders also to align so that it happens end to end, which is very important. Where, if I talk about on the other side, on the small and medium and the smaller enterprise, obviously there will not be, there is requirement to kind of persuade and convince them, because it becomes cost expensive as well. So in that per se, also the government intervention has helped them in incentivizing them, promoting them, helping them through finances, various schemes, so that, they are able to make that investment, come up to that level, so that they are also able to take those benefits of scheme. In fact, when you look at a lot of banking schemes being launched by government to make sure that right up till farmer, the all benefits go directly to that person, rather cutting away all the mediators. So all of that has happened through the response which is coming from regulator, government, all statutory bodies, PSUs, encouraging people to come. In fact, I highlighted one of the case of TREDS, which has really been on supply chain side, where it has been encouraged for all company, all banks to come out on a common platform where you get transparency and benefit in terms of getting competitive pricing, and you are able to get, faster funding. That way, the response has really been good. However, one of the important thing I really want to highlight is that, compatibility of the systems between the stakeholders and the government architecture, that is somewhere, there is a lot of gap. As long as that is not fixed, I think the entire benefits in the genesis will, only start coming in when that alignment is there. For that, there is a long way to go. And I'm sure, the actions are in the right way. And I'm sure the kind of, persuasion and the help and, kind of awareness. First is that kind of, knowledge, awareness about the benefits that they are going to really get when all of this happens. Then only I think you can get the lower level of the pyramid to help them adopt. And where I think the efforts are on, but the gap is quite wide.
So thanks, Harpreet. I think that's very well said. In fact, I thought you will use another acronym called KASH, cash, that we learned: knowledge, awareness, skill, and habit. So I think that completes the loop. So thanks for bringing that out. And I want to shift the focus and take views of Shiv, and specifically on regulatory and compliance framework and its associated impact on various stakeholders. So Shiv, because we are operating in a compliance intensive industry, right? It can vary between industries, but it is important to understand that impact on various stakeholders so that we look at strategies and look at opportunities created from that standpoint. Because as I mentioned earlier in my opening remark, that technology is never can something be done. Yes, it can be done, but as Professor Alok said, it has to be done in a way that you don't compromise the long-term interests. So hence, just wanted your thoughts and what kind of challenges this pose on various stakeholders.
Sure. So I think, yes, we all agree, and then we have been talking for some time now that the compliance framework and the internal audit framework has completely changed because of the digitization. I think if I summarize this change into probably, let's say, one sentence, we can certainly get into the details as well. So then I would say the compliance has no more a retrospective function in the digital scenario. It has become a real-time dynamic function. So, and as let's say one of the examples that I would do, which is not really related to the compliance, but you might have seen speed cameras in all the major cities. At least Delhi, I can see so many. You start from office and you're going towards your home. You overspeed up for a moment. By the time you reach home, you will get a text message on your phone that you have received a challan for overspeeding. So I think that's the kind of speed we can expect is there in the new regulatory expectation or the new compliance framework the authorities are expecting from the businesses. So and you really have to transform. There is a lot of technological transformation. Automated processes are there. Businesses are getting complex with the introduction of technology. As we were talking about, the geographical spread is there. So you really have to redo all your compliance framework. How are you complying with the requirements? And it is not only about complying with the requirement, but sometimes you are in a situation that you first have to identify what are the compliances applicable to the particular set of business you are doing or the particular activity you are doing. Let's say we were talking about the banking and financial sector. So you have a lot of digital payment apps and wallets we have seen. So you have to see like WhatsApp. WhatsApp has been trying to get established in the payments domain. They started, then they had to pull back because of the RBI data hosting regulation that you really can't host the data outside of India, the payments data. So I think that has become the one of the big challenge, I would say, is in this digital dynamic era, identifying what are the regulatory requirement, what are the compliance that you need to follow. So the following or complying with the requirement is a secondary part. First, you have to understand what are the challenges, because the business has become so complex and dynamic that itself is a challenge. Second is, I think, as we were talking about, the businesses have transformed, and there are new businesses also that have just come up based on this digital revolution. So I think then again identifying and understanding how these business operates, and then what are the compliance requirement are there. That's also a big challenge. You can always start a new business based on technology, but then understanding the compliance requirement, be it let's say a payment wallet, or even there's a lot happening on the crypto side as well. So understanding and comprehending the compliance requirement and then probably complying, that's the another challenge. Data, we have spoken a lot. Data is the new oil, but I would say if your data is the new oil, that's perfectly fine. But if you're not handling that voluminous data in a proper way, then that oil will very easily can catch fire. So you really have to understand and have your processes built in, that how are you understanding, analyzing, and handling that voluminous data. Harpreet mentioned that now the entire universe, you don't really have to go with the sampling, but the entire 100% universe of the transaction is available for testing. That's sure. But unless you have the right tools to do that testing, then probably you are, again, you'll be nowhere. You don't have the sample of maybe let's say 5% or 7% or 10% of the transaction. You have 100% of the transaction to be tested, but if you don't have the right tools, then you will be able to do nothing. So I think those are the challenges. And then ultimately, we have heard a lot, like the organization are giving a lot of trainings on the data privacy, data security. um, Probably every other day we would hear there is a phishing attack, there is an cyber attack on one company. So I think securing those your information, securing the data is one of the biggest challenge that the digitization has really posed all the organization to. And again, digitization has happened, and it has not happened only in the businesses, in the clients that we manage, but it has happened from the regulatory side as well. So if I talk specific example, let's say be it a GST transaction or a compliance, or an as simple as a TDS compliance. So while there is no paper being involved, no more TDS certificates are being issued, but ultimately all the transactions are captured. If you are claiming a TDS deduction done for you done by someone else, then the other authority, the other entity should also report that rightly, and then so that you are able to get that benefit. So all those checks are being done. You claim a wrong TDS or you claim a wrong GST credit. The next day, probably you will get a tinker from the authorities. Hey, it is not matching. So you really have to be on your toes and ensure that not only you are doing your transactions, recording your transaction correctly, but your stakeholders, your partners, your suppliers, your customer, they are also doing it in a correct way. And then all of this, while there's a lot of digitization, a lot of data is available, a lot of automation is done, you still need people. Nothing can be done without people. And then obviously, I think employee training and retention is not directly related to the technical side of it, but I think that's one of the most crucial aspect, I would say. You might have automated processes, you might have checks and balances, but you still need employees, and then training those employees to handle that techniques, handle those digital technologies, and then retaining them is also a big challenge. There's a lot of opportunities that are coming up, and then employees are usually they tend to shift from one organization to another, and then having them keep them motivated. Even some of the employees have that fear that, hey, this process is being automated, then I may or may not have the job there. So I think that training, retention, employee morale, that has also a big challenge, I would say, in any company or the business that is going towards the digital transformation. Lastly, I think I would say, being a finance person, investment. So nothing comes for free, unfortunately. So if you have to do even, let's say, the employee training, or if you have to automate your processes, or you have to gear up to a new technology, you really have to have the investment. So I think that is another challenge. And then if you don't have the investment, you're not able to run along with your competitors, your partner, then probably you'll be soon out of a business. So it becomes like a vicious cycle. If you don't have money, you can't invest, and then you can't run as per the new technology. And then if you don't have the technology, then you can't get the money. So that I think is again one of the important challenge, I would say. So broadly speaking, I think while even the topic of our webinar is the opportunities and challenges, but still and we've talked about a lot of challenges, but still I think I would say these challenges can be managed if we kind of handle them structurally, and we kind of do a well thought, well defined strategy. So this is I would say in the conclusion that this is still manageable.
No, very well. I think I really like the way, Shiv, you covered all aspects of the business, right? Right from people to process to technology to compliance. And as you rightly said, ultimately it's a people game, because no matter what you do, You have to manage your employee and build the culture, build the training mechanism,
right.
build the processes so that the firm is not dependent only on people. It has processes to support, as Clayton always says, right? The firm is a function of the people, the resource, and the process. And more matured
Absolutely.
the firm, the greater is the maturity on the process. And as they say, a well-run client's function is where you don't hear any noise. There is no there is no escalation, there is no fire, because that shows the maturity of the process. But in a very
True.
different organization, you see that everybody is running around, there are escalation, there are compliance order. Clearly there is a process gap. I think very well said, and I like the way you kind of took a 360-degree view. And most importantly is the investment, right? No matter what we talk in these forums, if the business cases are not put and the investments are not made, and the CXO mindset doesn't change from looking at this just from a pure cost function and deprioritize the investments, then we're not going to get really far. And we have just crossed the halfway mark of this webinar, and I'm very happy the kind of varied viewpoints that the panelists have shared. We started, just to recap, from the larger business context on how digital is impacting businesses. Then we looked at the domain view, and Professor Alok so rightly highlighted how data is ultimately critical, right, to manage the data, to build in the process in place. And then we specifically looked at the impact to stakeholder, right, from internal stakeholders, CXOs, CFOs, and then external stakeholders. And finally, look at all this from the ambit of risk and governance regulations. And the most important, point of view that I really want to throw this question to Professor Alok is, as we look at this, and as Shiv already mentioned, that we need to look at investing early. But investment is always a function of the value that this creates, right? Many times we start looking at this as a cost, at least the CXOs who are driven by margin and quarterly pressure. So how does the internal audit function really add to value creation, so that it's not just seen as a cost, but also looked at, how does this enhance the firm's value? And what are your thoughts, Professor Alok, around this?
I'll just give you, I'll just tell the audience one basic idea, that when you value a particular firm, there are certain key drivers. One of the drivers is the free cash flow, which is NOPAT minus net investment in operating capital, year 2 minus year 1. And the net, when you start looking at your free cash flows, they are driven by not just revenues, but also about how a particular company runs its business. We one of the key metrics which has come for improving firms functioning is not just revenues. You have to look at the number called free cash flow. The second, and there, you also, if I look at if I expand this formula, NOPAT minus net operating, net investment operating capital, and I start looking into the operating capital function in net current assets minus net current liabilities. So you get into a plethora of activities which are probably about financing a firm, right? And from there, you also derive something called the cost of capital of the firm. The cost of capital of the firm is normally, when you calculate the value of the firm, is in the denominator. We discount, the free cash flows with it. Of course, we project free cash flows, then, we identify a particular number called cost of capital, and we discount it, and we come to something called, a particular number, out of which we say that, this is now my firm value, from which I can find out a value of equity overall. So now, when you look at these numbers, the key issues are revenue. The key issues are costs associated with the company. The key issue is cost of capital of the company, right? Now, when you have right internal control processes, you are actually affecting each of the variables. So you are looking at every aspect of your company when you are managing things well. And this, let me just once again show a small diagram on how this entire thing works. The basic idea of running an organization is this. Let me just show you the slide. I hope people can see this. the company basically works in this manner. You have a board, and a board functions through, a board adds value to a company through these things: board independence, board composition, leadership structure, promoter shareholding, the firm performance, the idea of, the several, you can have different types of firms: finance firms, non-finance firms, different idea. And, all this becomes part of your corporate governance factor. Now, when you look at companies, and you look at value enhancement, what do we find? That, majority of the time, a survey in 2017 showed that majority of the time, the internal audit spends majority of the time to areas of businesses, and, the areas of businesses which add value is not where the internal audit spends most of its time. It spends most of its time in those activities which do not add value to the company, right? So majority of the time, the internal control people, they basically look at regulatory compliance activity, say 38% times on the day-to-day activity, and very little on the strategic activities. Now, one part is that internal control processes can help you through the right numbers and improve your firm's value. Two, they can also bring the board to a point once they submit the data that, fine, let's plan for the future. If you look at it, when I say the firm value, I say that we project the free cash flow for the future. And that is the strategic part of the company, whether the company is. So what really happens is that we need to now add all these factors. The previous slide, actually, most of the research papers, when they study the firm value and its relationship with internal audit quality, or the functioning of audit committees. And in fact, audit committees basically look at largely internal audit reports, right, which is their job. And at the end of it, they finally look at the external auditor's report, and they come to a conclusion as to where the company goes. So most of the companies have found, most of the researchers have found, I found researchers from Europe, from US, even Pakistan, that, the quality of internal reporting and internal control affected the firm's return on assets, as well as the Tobin skew. Tobin skew is a number which basically talks about how the firm value increases over a period of time. So what really happens is that the audit committee, which through its right kind of reporting processes, helps a particular firm not just reduce cost, it also can help add revenue by identifying the strategic areas where the firm should work. And then a firm over a period of time can improve its value every time. So, if we look into these ideas, today, the issue is, one part is that we should have right internal control processes, so that if, for example, there's a fraud, we can predict it, we can control it. If cost escalations are being, say, in a project, cost escalations are happening, or time overruns are happening, we are able to control it. If, for example, people are, if there is some problem in the purchases or procurements, if money is being spent on a lot of activities which are not beneficial for generating value for the company, they can be stopped. But the internal auditor can also tell the board that these are the strategic activities. The internal auditor's role today has to change from mere regulatory compliance or monitoring day-to-day activities, which is about cost cutting and identifying, to something like strategic activities, which actually add most to which is the top of the pyramid. This is called the process pyramid. So the fact is that as time is in the digital world today, as we are able to control costs much easily, we are able to look at our processes and we identify frauds much easily. The internal auditor's role has to evolve in becoming a strategic advisor to the board. And that is what we expect every time, that, if we have to curtail some particular activity, will it have a strategic impact? If I have to add some activity, some strategic impact, the inputs basically would come from these, from the internal audit function. So if you compare this particular idea, I'll just stop sharing this. But if you compare this whole idea, what I'm saying is that the future auditors have to learn that the conventional role was, in conventional financial theory terms, was adding value to the firm by reducing cost and telling you where revenue can be increased. But the new role in the digitized world is that the internal auditor also talks about the strategic perspective and spends more time on identifying strategic cost cutting and strategic revenue generation with the company. So that is how I think the role is evolving. And let me tell you, most of the digital companies, you talk about Amazon, some examples, you talk about Facebook, you talk about Alphabet, you talk about majority of the new age insurance companies in India. Most of them follow a process of integrated assurances, agile auditing, everything. Japanese companies, if you look at the way profitability is managed, there is no better example than the Japanese companies. They have every aspect of inventory as part of internal control. We learned just in time from Japanese companies. We learned economic order quantity management from Japanese companies. They have very little inventories. They have very little, time lags between when they produce something. The overall the inventory costs are low. Their procurement costs are low. They have a wider set of suppliers. This supply chain crisis has also taught. Now, just see, in India, the supply chain crisis actually led to long, periods for which customer had to wait to buy a particular vehicle in automobile companies. The Japanese companies were the fastest to come back. Mahindra and Mahindra took a little more than usual. Even today, Mahindra and Mahindra has almost like 2 years wait on some of the major models. But come back to Maruti, it controls still today 60% of market share. And that is the power of internal audit and control in the Japanese setup. Similarly, Taiwanese companies, companies in Southeast Asia, majority of them focus very proactively on the strategic aspects of the company rather than, day-to-day compliance or regulatory framework.
So, Professor Alok, I'm totally mesmerized by some of the insights that you shared. In fact, I was listening to one of the greatest valuation gurus of all times, Ashwath Damodar.
Thank you very much. Thank you very much. I'm honored, to hear this from a chartered accountant.
I was, when they asked me to, moderate this panel and be part of this panel, I was very looking forward to learning from, all of you as much as sharing my perspective. And as you rightly said, Professor Alok, I was recently, going through a video by one of the greatest valuator of all times, Ashwath Damodar from New York, Stern. And he talks about, valuation ultimately comes down to the story and the strategic intent of the firm, right? That's what differentiates the best people who value firms correctly versus those who just, look at it as an academic exercise. And, your commentary also, reminds me of Peter Drucker's famous quote, which says that, there's nothing so useless as doing efficiently that which should not be done at all. And yes, to me, the key takeaway for me from this webinar, the point that you made, and it hit me like anything, is, start looking at this function much more strategically, because the CEO's top priority or the board's top priority is value creation. And how does this function add to the firm's value? And as you maintain that strategic perspective, new avenues open up so that you don't relegate the function to a very operational, where today, as you rightly said from that chart, majority of the time is spent, which is a complete incorrect way, as Peter Drucker says, right? You should focus on things that add value and also transform and relook at your function also as a strategic advisor to the board and advisor to the CEO, so that you completely look at it in a very, very different perspective. So thank you for that very rich set of insight. It's, gets us thinking, and that's what is so valuable about this, webinar, where we bring different industry to share their viewpoints. And my next question is to Harpreet, and with this broad context, Harpreet, if I look at firms, where should they invest? how should they, enhance their capability, right? Because clearly this is something, as you rightly observed some time back, it's not a question of that, you can overlook. Digital is here to stay, and it's a survival issue. And hence it comes to the point that, where should the investment go? What kind of capability enhancements are critical for functional heads, for the organization? While many of them in this call might not drive change, but they should know this so that they can, support change in the right direction. So over to you, Harpreet.
At the first place, I think, Krishnan and I echo your thoughts while I was also, carefully listening to what Professor Alok was sharing. It's all about bringing a paradigm shift to the internal audit, and that's where, in fact, leveraging the benefit of digital, what we are talking about. I think if we, in the true essence, use digital to the best of our, best side, then I'm sure all of this will start happening, because then you are able to save your time and effort towards some of the areas which are very critical and also value adding to your entire enterprise. And that's what, as you rightly said, the board is actually looking at. And the kind of aspect, the pyramid, where, in fact, it was very insightful to know that ultimate our focus is, as an internal audit today, only focused about regulatory compliances. I'll come back to your question and I'll connect both of them together. Like, now when we're talking about the benefits on one side, that how we can effectively use that artificial intelligence for cutting down our time and using it effectively for value creation, at the same time, making, a value proposition for ourselves and our own mind share within the scheme of things. One thing that comes very obviously out of our discussions is that auditing as a function has completely transformed. It is transforming, and there's a big time change which is coming up, and the kind of paradigm shift that we're talking about, I think it will take it to a next level. So the strategy, the execution, the approach, the tools and the framework, everything has changed. And it's also, being volatile and changing every now and then, because technology is involved and it's being, on the verge of getting finer and finer and finer. And that's where, it is going to get. So what is most important in terms of enhancing the capability? I again call it as KIT, knowledge integrated with tools and techniques. See, you need knowledge. The first most important thing, as a chartered accountant, we all are very knowledgeable. But, as one of the discussion by one of the panelists was, we are knowledgeable in terms of finance. And when we are dealing with fintech, we are dealing with digital. Now we have to be best in finance and technology. So the technological knowledge, basically, and I'm sure, ISA is one of the requirements which has almost have become, mandatory in most of our audits which are there in technology. And I'm sure it is going to get to the next level and people have to adopt to that. But having knowledge alone will not be enough. Knowledge has to be integrated with your tools and techniques. I think Shiv was again touching upon that, you have the universe and you can, have that entire universe as a sample, get the output, effectively transform only if you have tools and techniques. So you will also have to understand what is the right tool that has to be used, and that application has to be integrated with your client. You may have a tool, but if that tool is not integrated with your client, I'm sure either side will have always a problem. Second most important aspect is some of us are in a partial mode. No, digital has become phygital now. No, physical plus digital. Although it has its own benefits, but the problem is when you apply partial integration of digital with manual, sometime the output may come out to be erroneous. That's an important thing which has come out on the ground, because these are some of the challenges which people even face. So you will also have to be careful enough that what is the base level that you have to set when you start applying your tools and techniques. So the manpower is most important, where you need to have right side skill, people with expertise who know how to, kind of interpret and use tools effectively. At the same time, you also need to see that your tools are integrated with the clients and the entire infrastructure is in sync. Only then you can get the output. Another aspect which we have found is the level of confidence that you build once you start using those tools and techniques in practical application. The challenge on the flip side, when it comes, these are the new tools and techniques. So how much, kind of testing do you do? And after that level, you start gaining confidence to say with confidence, okay, the output is 100% accurate. Is another aspect where the capability is to come, where you will have to have a set of data, or you have to go back, do testing on your actual data along with manual outputs and see a UAT is there. And finally, you are able to build that confidence and say, okay, my tools and techniques are first, latest one, integrated with my clients, tested enough, giving me the right kind of output, and then I am able to see, okay, the final outcome or the result which I am trying to build on is, nearly perfect, or at least on that. Obviously, it will take some time, but these are some of the most important capabilities that have to be built across functions. Another thing which I always feel is, once you are ensuring that this digital infrastructure gets in sync into the body, it has to be end to end. It cannot be, I already said about partial integration will lead you to a phygital, or the partial approach where the outcomes may be wrong. You need to make sure the collaboration between the departments is also very, very important. They have to work in sync. It has to be put together, not in silos. Because one of the example I'll share is that there are some of the units who have gone into technological space, but some of the units are not into that technological framework, or there are systems in place, but the other system in other department which are actually leg to leg connected, but their systems don't plug together. They are not integrated. In that case, the challenge will come. You have to interpret the data from one system and then refeed the data into another. If they are not talking to each other, you will not be able to consume the data from one system to the another. That's again a capability problem where you, as an internal auditor, you have to test and in fact bring that collaboration in place where departments have to work in sync and make sure that the entire value chain comes up with the entire synchronized way, that you don't have some missing links in between, which will actually create a bigger problem. So again, so the punchline is KIT. Your knowledge integrated with tools and techniques is going to take you to the right place, and I'm sure it has to be full-fledged. It will take piecemeal doing, may put you in a wrong order also. In that case, you have to see how much is the baseline where you have to start with. And finally, you also have to make sure that your right testing is in place when you actually go out and say, okay, this one is done, and now we can, at least be, kind of okay with the results.
No, very well said, Harpreet. And, on a lighter note, you're making it very easy for people who are listening in to remember, the key takeaways from this webinar. At least I have noted TCC, BRE, and now KIT. So it's kind of very easy to recall, the key messages. So thanks for bringing that up. And you made a very interesting point. In fact, that's something that I also, always use in my own governance reviews, which is whenever somebody comes up with a bright idea on technology investment, the question that I always ask is it empirically validated? What is the empirical evidence that this works? And as you rightly said, it is very important, technology projects, transformations fails when, they are not tested well. Because, the easiest question for me to ask in this webinar to the panel is, what are the opportunities that technology brings? But that would have been something that anybody who's listening in could have Googled and got it. But in the context of what we spoke, I think that's where, people should reflect and see, the nuances because technology is out there, but how do you apply it in the context of the business, in the context of regulation, in the context of stakeholder expectation? So very well said, Harpreet. But I'm going to ask the question that I didn't ask at the beginning of the panel, and the person who's going to answer that is Shiv. So Shiv, now time has come for us to really take this topic head on and give us your perspective, right? What is the gamut of opportunities that technology offers to internal and audits function and to the organization in general? And take us through your thought process on this so that we don't miss out on any key elements, which is important. And I believe that now we have prepared the mind. Sometimes the mind has to be prepared to take an idea. So I hope people who are listening in, their mind has been prepared with what are the insights that the panel has shared. And now as we absorb what the opportunity offers, it's you start looking at it in a very different light. So over to you, Shiv.
Thanks, Krishnan. I think you rightly said. I would say this is probably the easiest question, but simultaneously, I would say it could be the most difficult question as well, because I think all of us know, and I think we've been talking for some time now, and briefly, some way or the other, talking about the benefits or the digitization opportunities over the last some time. I think if I just say it in a very simple or summarized way, I would say it is basically technology, something that enables every stakeholder, I think, at all the aspects of the business, audit and everything, to perform their respective activities in probably a more efficient, faster, a more accurate and a cost-effective manner. So it kind of gives you almost everything that one would aspire for. But still, I think if you're not handling it properly, if you're not doing it correctly, it could backfire as well. Another simple thing that I would say in terms of opportunity is, like we were talking about, if you don't use technology, it will be difficult for you to survive. So it basically offers you the opportunity to survive. Otherwise, you really are not able to survive. Then coming back to some specifics with respect to the internal audit function, which is our core area we are discussing. So I think I would say it basically helps you prioritize your time and prioritize your focus area. It allows you not to focus on doing some of the manual checkings or transaction validation and things like that. And it helps you to change the perspective of the internal audit to the client as well. So I would say that historically, anyone would see internal audit, or the team would come, they will probably do some transaction validation, ask some questions, you will have some answer, they will go, and then they will come back next quarter. So I think that mindset can be completely changed with the help of the technology. You don't really have to, the internal audit team don't really have to spend time on those transaction validation and asking questions. This approval is there or not there. Rather than they can actually understand the business, help the business doing things in a more efficient way, really saving the business from the risk, even from while using the technology. It could be a data privacy risk. It could be as important as I would say helping them on the BCP plan, on the business continuity plan, which was, like, I would say, most of the organization have seen, like in this COVID pandemic time, BCP, which was, I would say, is more of a theoretical exercise. Most of the people were thinking that has actually come into play. So I think that one opportunity for internal audit is really to become an enabler and helping the business and changing the mindset of the client, that they are not there to just ask questions, but they are there to help. And then obviously some of the transactional things would be you can do a lot of analytical trend analysis and maybe budget versus actual analysis, rolling forecast, which will basically gives you and help not only the internal audit team to understand how the business is moving and how the business is growing, but give the right ideas to the management as well, that what probably they might have missing. see, the advantage is all those information, those tools could be available directly with the management as well. But I think where the internal audit team is going to do the value add, one, they are going to analyze those or review those as an external, I would say, a stakeholder and advisor. Sometimes when you are looking at the same things on a day-to-day basis, you might tend to miss the perspective that probably someone who is coming from a different background, who has got experience, as you said in one of your comment, has the experience of working in different industries, seeing different practices across the industry. So that kind of becomes very, very important. And then obviously all those system build checks and controls are really good opportunity, even from the both on the company as well the internal audit side. There are ERP systems now which throw a lot of exceptional reporting, a lot of audit trail that will be very useful for the internal audit team. I think another thing that could be, as an industry person, as a let's say a finance leader working in the industry, one of the pain point that I have seen from the internal audit side is the employee turnover. This quarter I have got one team leader or let's say couple of team members from the internal audit team, and we try to make them understand the business so that they can be helpful. Unfortunately, 2 quarters down the line, the team is completely changed. So that kinds of limit the utility of the internal audit team. So if you are doing using the right technology, so you can probably have a permanent audit file, you can have the right records, you can have your processes documented, and I think that is, I would say, maybe, and many of the industry finance leader would agree, that's one of the actually a pain point area which internal audit teams can really mitigate to some extent. And they can, instead of redoing the things every other quarter or every other period when there is an employee turnover, they can really concentrate on helping the business and be a value added partner to the company.
No, well said, Shiv, and thanks for boldly trying to answer a difficult question, because it is pretty much, that question where, you can pretty much talk for whole 3 hours, but you very crisply summarized. I must appreciate that it is important that, you look at it from a multidimensional perspective. And the question is, again, not what technology can do, but the question that business leaders, functional heads need to ask and truly answer, right? Not just for the sake of, your bosses or regulators, but truly answer is, what is the maturity of the firm to absorb change? Because many times you try to implement something, and like you said, neither the people, neither the process, neither the culture supports it. So you're better off, adding only that much, so that change is evident, you get the quick wins, and you create the energy and momentum in the organization to proceed. So thanks for very nicely highlighting that aspect. And again, I want to turn over to Professor Alok. And one of the paradoxes, Professor Alok, and I hope you will try and solve this for me, is you mentioned earlier that the audit function needs to view themselves strategically, right? They need to elevate their thinking. But at the same time, today, because of regulation and other aspects, 70-80% of the work is still manual, repetitive. And, as, it was Mukesh Ambani who, mentioned about, data is the new oil. But I was listening to Sundar Pichai the other day, and he was saying that the discovery of artificial intelligence is as significant to mankind as the discovery of fire. So I want to take your views on how AI analytics can really play a critical role to automate some of the manual and other aspects, so that it gives that opportunity and bandwidth for auditors to elevate themselves, as you rightly said, to be a strategic partner to their CXOs and to the board, right? So just wanted your thoughts around it.
The fact is that today, if you look at the way organizations function, the internal audit teams, internal audit is not just about, talking about your identification of risks they're also talking about sustainability. They if you look at the entire debate about climate change, how do processes change and how do we ensure that companies move towards greener, cleaner kind of a world? So internal audit has a role to play. It can always generate a lot of information, identify information, add value to the organization. Cybersecurity, for example, recently you had a server crash at All India Institute of Medical Sciences, AI AIMS, 10 days, India's largest hospital. And just see how much of pain, just imagine how much of pain. Delhi is now cold. It's almost like 7 to 8 degrees at night. How much pain would have that would have brought to the patients? We sitting in Delhi, I can tell you it was. Now the fact is that it is the failure of the internal auditors to identify the threats which come when you start utilizing such high-end systems. They don't know how to tackle a virus. The technology risks, right? Risks of all types. Technology risks basically are something which can be easily audited out. You can have probably we will come to know after a few years that the antivirus subscription probably had expired and the servers crashed and nobody came to know because the bills were delayed. Because the payment was not done on time, and probably several patients lost their lives. Similar is the website crashes. Companies which basically have the cybersecurity part in terms of when the companies are unable to manage their resources well. Cloud, when you are actually on cloud, what can go wrong with us? Can the data leakage happen? Can I lose a particular server on the cloud and I do not get access to my information which I need? So business planning, is another area where internal audit plays a role. As I said, strategic role. Geopolitical risk. How do I, sitting in Indian Oil, how do I manage my futures contracts, right? So that I am able to manage the price risk incident upon my. So, the answer lied in, having clever controls over currency contracts. Don't go for dollar contracts. Look for other currencies. And that's what we are doing now. Majority of the oil companies are actually, so there is Russian ruble, where people are buying oil, and there are other currencies. They're already negotiating with some South American countries, which are major producers of oil. Apart from OPEC countries, they're trying to do a rupee deal. In fact, with Sri Lanka also, we tried our level best to provide them support, not in dollars, but in rupees. So, somewhere down the line, I'll share one small snippet before, the audience. And if you look at it, let me just share my screen once again for last time in terms of, let me just show you this. I hope if you can see this. So if you look at the way things should work now, there is something called planning, and there's something called reporting, and there's something called audit execution. I'll look at each one of them for the benefit of the audience. So the planning part is like, this is the role of data analytics in internal audit. What analytics can do for you, you should have the info, you have every company now works on data. Majority of the companies deal with, huge voluminous data. We call it big data. Whether it is a hospital of the size of AIMS or a company of the size of Maruti Suzuki Limited, which has hundreds and thousands of dealers across the country, or a national stock exchange, which has 1 billion plus orders punched onto its servers every second. Banks like State Bank of India, or even large private sector banks like ICICI, or even Yes Bank, which has been doing very well, represented by Harpreet on this panel. So the fact is that risk profiling is something which is the first step, which and the first thing which the internal audit system can take the help of in data analytics. So, for example, in banks, you can easily identify the credit profiles. I mentioned it earlier. Majority of the ideas, in fact, for all companies which are into some kind of a financial business. They can do risk profiling of their customers. In fact, they're using it the most. They're already using it, not to say. And the internal audit processes also can, do the risk profiling of other types, companies, identification of all kinds of risk on the company, whether they are financial risks, whether they're operational risks, whether they are, kind of foreign currency and related risks, etc. So when or credit risks, for example. So when we look at the market risks, risk profiling in terms of, so similarly, data simulation. When you have a lot of data, you can use that data to simulate for identifying, and that's what we do in equity markets when we use the high-end models for calculating the prices, and of course looking at those times when we can have extreme loss events. It's basically based on data simulation, and the exchanges do it very perfectly. Every day the committees meet. I work with a large exchange, and I understand some of the processes there. And they regularly create risk profiles. The EWMA models and GARCH models are used for that. So the fact is that the idea is that data simulation basically helps you. Similarly, statistical sampling, all this is planning. So the internal audit team can actually do risk profiling and data simulation and statistical sampling. And this they can use high-end, as I said in one of the earlier ideas, that, whether it is data which is unstructured data, whether data which is structured data, whether data which is automatically coming to you, all kinds of data can be managed by using right kind of tools. You can use natural language processing tools. You can use machine learning and all those things. The other part is then monitoring, the monitoring parts, if you look at it. So audit execution. So you can have control simulation, you have predictive risk identification, you have fraud indicators and control monitoring, which will come out of the data which you have, and you've used right kind of softwares, tools, and processes to process them as an internal auditor. And finally, you report it to the management, that is to the audit committee. The root cause investigation, the real-time exception management, and risk quantification. So, when you start looking into the roles today, with every aspect of the organization in control of, every aspect of the organization generates data, and the data is largely available with us. We can identify, and we can, using this particular format, every aspect can be understood by the internal auditor through tools of data analytics, and several predictive analytic tools are being used for last several years. If you look at the descriptive part of analytics, they explain things very well. If you have historical data, the predictive part of it, they also predict things very well. And that is one thing which has actually added to the efficiency of organizations. It has not just added to the improvement, say, for example, calculation of hedge ratios. So you use normally hedge ratios, to minimize risk, and you can bring beta of a portfolio to zero. So much so that even if the market goes anywhere, you can actually, for at least for a short period of time, you can sustain the market. So once you have the data with you, you are able to utilize it to calculate the right hedge ratios, and then identify as to how things really work. So the internal auditor can get an idea whether things have been done right or wrong. So what I wish to say is that if you have a plan with you, if you have right resources with you, if you have right machinery and tools with you, and some, of course, chartered accountants who have learned the basic ideas, today every aspect of internal audit can be converted to a very in a very planned manner, and you can analyze it and report it to the management, and that can add value to your organization. So it is already being done in financial services sector. It needs to be converted already in automobile sector. It is being done. I can see examples in my own company. We have got systems in place where, because we have 4 lakh, 5 lakh, 50,000 rural entrepreneurs across the country called common services centers, and we manage them through dashboards. And we have to have that control. Why? Because most of them actually, we had last complaints regarding some of the government schemes where people were taking advantage of, and some of the rural entrepreneurs were, taking us for a ride. So the dashboard tells us where things are wrong, and immediately the ID is stopped. Wherever we find anything, the ID which is given from the government side to that entrepreneur to give the government a scheme to a general public, if a variance is found, we block the ID. And this actually happens in majority of the processes. So I feel that, if you look at the present day, a lot of work is being done. Only thing is, this needs to be converted into some kind of a textbook approach for the students of auditing. And some training mechanism has to be brought in, so that small and medium enterprises, micro, small and medium enterprises, my friend Harpreet deals with them, they also get benefit of this, what big companies are doing. So probably I think there's a good time ahead for the internal auditors, with huge processing power of computers and large number of open source softwares available. You can hire engineers and you can take help of Tech Mahindra and companies like Tech Mahindra, can help you build an internal audit process, which will help build value for the company.
Thank you, Professor Alok. And I'm short of words to describe some of the insights that you're sharing. And I'm mightily impressed with the level of preparation that you have done, culling through the best of research and cutting edge, thought process. In fact, you remind me of one of my own professors who actually was a batchmate of Indra Nui in IIM Calcutta. And before that, he passed out from IITs and he worked in the corporate, only to go back to do his PhD. And, he continues to be one of the top academicians. I don't want to name him. But, he always said that, because we all used to ask him, why did you go back to academics? And he always used to say that, whatever I see in the industry is always far behind when it comes to, the thought process. So thanks for inspiring us, and you definitely inspire me to do a little bit more reading over the weekend. So then it's a very, very valuable set of insights that you shared. And that brings me to the next question that I have. And I'm going
let me first thank you for the generous compliments. But, this preparation is because of the WhatsApp group you prepared, you created, and the pressure by Harpreet.
Yeah, I think we all inspire each other. And with that, I want to, put Shiv on the spot, because with so much of opportunity out there, Shiv, according to you, why is the industry lagging behind in adoption? And what must people in this forum, they all have an opportunity. I don't know whether they want to continue on the academic side or they want to join the industry, but clearly, what is it that people in this forum should always bear in mind? Why is the adoption low, especially in the audit and compliance function? And, if you could share your thought process on why, and possibly, if possible, also highlight some of the things that one can do to drive adoption in a much better fashion. Clearly, opportunity is there.
Sure.
Adoption is low.
Absolutely, and I agree. And I think I would say, Krishnan, I would say, I on behalf of our community would take the blame for it. Because one, I think there is the biggest reason I would say is the cultural mindset. Finance or compliance and audit, these functions are usually considered as retrospective functions. I think we are responsible to change that mindset. We have to move away from that mindset of us being considered as a retrospective function who will probably do some kind of, as we used to call in our early audit days, postmortem of the transactions, rather than really being a proactive function, helping the business and helping the adoption of technology. So, and I think that biggest issue is the cultural mindset, as I said. So usually what happens, the organizational leaders and some of the decision makers see that the digital transformation, just they see as a path to grow the business, streamline their operations, and probably strengthening the customer relationship. So and even in doing so, they think that sub functions like sales or supply chain or research and development or all these functions which are probably directly related to the profit and loss statement of the company, or increasing both the top line and the bottom line of the company, are really critical, and they should be part of this transformational journey, and they should be part of the decision making on that transformational journey. So I think that mindset is really pushing the adoption of technology in, I would say, our kind of function or domain in the finance and internal audit said. So I think that really it's our responsibility. Like, I think this is, like, I would say, one of the good initiatives that we are discussing in this webinar, specifically for the particular community that we are addressing to, talking about all these opportunities, benefits, and challenges of the digitization. So I think I'm sure this will lead to probably some basis point increase in the percentage adoption of technology in the internal audit and the compliance field. And as this, because of this cultural mindset, usually we are the last one to get involved in this journey. And I think the other thing is, another thing I would say, obviously the mindset is an issue, but even from our side also, I think as a finance professional, I would say we are not generally very aggressive in terms of adopting the change, or we are not probably very tech savvy to some extent, I would say. So I think we are generally running behind the speed of the digitization. So I think that's something that we really need to change. We can change the cultural fabric of the company or the organization if we change our mindset first. So really have to, and obviously that will not come just by thinking. I think we have to do a lot of efforts on the training ourselves, on prepping ourselves on the technology, understanding the technology, and as some of the really insightful techniques and concepts shared by Professor Alok, I think if we even start understanding those, start implementing those in our day-to-day operations, in our audit functions, in our compliance function, that's really going to be very helpful. So again, like I'll conclude my comment by reaching out to including the human resource part of it. So I think we really have to work on the training our teams, training ourselves. So that becomes very important. Unless we have the right team and right human infrastructure to kind of push the change on the cultural mindset and understanding the technology, and really, again, I'll use the same terminology, from a thief catcher to probably a business enabler. I think the adoption of technology in our respective functions are not going to change. So that's the mindset I think change we really need.
No, very well said, Shiv. As you rightly said, many times it's always the mindset, right? And one of the things that I very look forward to spending this 3 hours. I've done almost 30 plus such talks in the last couple of years, but I've never done a 3-hour session. So I was kind of curious, can I keep the audience entertained for 3 hours? Because 3 hours is a long time for somebody to keep their attention on. But I think we have kind of really taken this topic at multiple levels. And clearly, as you said, for those who have stayed on due course for, last 2.5 hours, I think all of them should pat themselves on the back, because that shows the mindset of, openness to learning. Because that's ultimately it, right? If you are open to change, if you're open to learn, technology is not, a wild animal that you can't conquer. And as somebody else mentioned earlier in the talk, that I think it was Professor Alok, when he made this point that everybody should start looking at technology as an extension of their function, because today technology permeates pretty much everything that we do. And with that, I want to really take a hardcore reality check from a practitioner's viewpoint, and I want to turn it over to Harpreet, if he can share, an experience around implementation that he has, observed, and how, organizations and functional heads can ensure implementation goes smooth. So what has been your experience, Harpreet, and what are some of the key takeaways? And I also see Mr. Nanda on the call. Hello, sir. Thank you for joining in. We're just concluding.
Thanks a lot, Mr. Krishnan. In fact, I was traveling. I was coming back from Hyderabad, the international conference.
Nice.
I thought that at least I should be for the vote of thanks. Please continue. I'm here only.
Thank you, Nanda Sahab, for joining.
Thank you, RPG. How are you?
Yeah, for bringing this warmth. In fact, we were missing you all throughout this session, and we were eagerly waiting for you to I was just looking at when Nanda Sahab will join. And
I appreciate it. It's a great.
Good evening.
I was also very keen to join it.
Yeah, sir.
Yeah, no, that's a great opportunity that you have given to us.
Yeah, right.
It was always
Good evening,
you're
sir.
working.
Thanks for joining, sir.
I'm really thank you, Shresh. I'm really thankful to all of you that you have joined and made this program a great hit. Very thankful to you.
Yeah, so thank you, sir. And then coming back to what the point, in fact, very interesting point that has been raised by Krishnan, and I'll just build on from where she have left, because, very pertinent point that he was just trying to bring on is the culture, that it's all about mindset. If we really want to adopt it, it just take that kind of mindset to bring the change, right, from, the end to end of the enterprise. And my experience on the adoption side, if I say, and that was touched upon by Alok ji, that the adoption has been very well placed in terms of the organized sector, and especially on the BFSI space, we have seen, because, all those segments who have really realized that this is actually a survival mode. You cannot survive without digital, transformation. All of them have actually gone into that space. However, when we talk about the major, the large part of the pyramid, which is actually the unorganized sector, there we find there are not only the culture, but the awareness also. Awareness become very, very important. They have not yet realized the importance and the benefits. And, while we have been talking all about so many advantages of digital transformation, but the kind of benefits and cost benefits, it's like cost versus benefit analysis, which we generally see, like we were also talking about value creation. It is very important to make those enterprises aware that how actually in terms of overall cost saving, which may look today, when we talk about small enterprises, they are always thinking that it's very cost expensive. It involves a lot of cost infrastructure. In fact, the flip side, while we have been talking about saving time, we talk about TCC, time, cost, and convenience. But while they look at it, it becomes more complex for them, where I use the word called simple yet complex. Like you are making things simpler sometime, but it does become complex at times, while you have created an infrastructure which actually is same way. Like we said, if it is not interpreted correctly and not integrated, it will create more complexity in your systems, where I think as an internal auditors, while we have been able to, kind of foresee that this kind of advantage and benefits we are seeing in companies' overall performance, efficiencies in the bottom line, we will be the one who will also be able to encourage people to get into that transformation mode, where they can use all the digital techniques. For that, they have to have the end-to-end digital infrastructure ready. And when I will also create a contrast here of digital transformation inside and outside. This was something related to inside, which has to be enforced from the top. It is about resistance has been there, and we are also seeing, but when it brings a mindset change, that has to be driven from a CXO side. It's a mandate. Once it comes as a mandate, it gets enforced. At the same time, it also has to be, layer to layer from business unit heads, cross-functional as well, which again, we have spoken. Now I'll give another dimension to it, which is outside also. And as I come from banking, financial service space, the outside transformation on digital has also been happening very well, because, when I see banks have realized that they need the technology transformation at a bigger level, there are kind of collaborations happening. Most of the fintech players coming forward, either collaborating with banks to come up with novel ideas, digital techniques, the USP models, where the cross-functional synergies are helping them leverage the benefits of each other's strengths. It's like, building on the strength of each other, and then, coming out with something which is unique. So while we have spoken about the problem inside, where as an internal auditor, we can really help and through the CXO mindset, we can bring that change. At the same time, we should also look outside. We should also see from that cost benefit analysis, is it possible that the digital transformation, if we are not able to bring linearly in inter hierarchy, can we bring some collaboration through, for example, you can also see a lot of fintech players putting people on the board, taking stakes, amalgamation, the kind of, mergers, and so many kind of models getting into play. So that the transformation is happening in most of the organized sector, and the unorganized sector is where there's a long way to go, and where we can play a very pivotal role.
Thank you, Harpreet. I think well said. It's always important to have and marry the art of possible with the practitioner's viewpoint, and possibly that's one of the reasons I stuck with the industry rather than going into the academia, because that's where the rubber meets the road. So thanks for sharing that experience of yours, which we have to keep in mind on some of the practical implementation challenges. And I would also, invite some views from Dinesh on, any case study from his own experience that he could share that will further, build upon the narrative that Harpreet just mentioned in terms of the implementation. When technology meets the implementation in an organization, what is your personal feedback experience, Dinesh, that you could share with us?
Sure, Krishnan. I would like to share experience gained during involvement into implementation of several ERP softwares. First of all, irrespective of which ERP software company chose, there are few common and important steps for successful implementation which I would like to touch here. The first one is the communicate a clear vision to the users. It is important to communicate a clear vision of what the new ERP function will do for the company, and both immediately and in the future. Because change in the existing procedures can be difficult for some employees, so it's important that they understand the benefits of the system as it pertains to their individual jobs, as well as to the entire company and its goals. Choose a champion and an implementation team, I feel, is another common step, which is required. The champion may not be from an IT expert, but he or she should have a good technical skills and understand your organization's business process completely. Also, give him decision making authority, because there are lots of obstacles arise during the course of implementation which need to be taken care of and removed for a successful implementation. Implementation team also includes core users and representatives of who are representatives their respective business verticals and support functions. Another common step I feel is the documenting the SOP. In every company there is a processes, but when we are going for a ERP implementation, it is one of the main requirement that we should document those processes in the form of SOPs. This document will ultimately help us to select and design the system that is best for our businesses. The next common step I feel is the flexibility. There is legacy system which every company used to follow for managing their operations. So we should ask why our business process are and what they are, and don't accept because we are always get it that way as an answer. The process in your new system might be different than what you are used to, but before you go through the time, effort, and the expense to change them, find out if they really work for you. There may be a significant advantage to changing your company's procedures rather than changing the software workflow. So we should adapt the flexibility in our existing processes. Another point which I feel is managing the organizational change. For this, we should highly praise the benefit of the system and share the vision and goals of the project with all the users. We need to talk to our least comfortable people, listen to their concerns, and try to address them. There might be certain concerns which can immediately address. So here communication is a success, wherein we should convey the plans to solve them and when. There should be timeline, if some of the issues raised by them cannot be solved immediately, so we should tell them that this will be taken care of down the line. So as a next step, a typical ERP implementation can be divided into 6 phases, which are planning, design, development, testing, support, deployment, and support. So I'll give a gist in very little brief considering the time. So the first step is the system planning. During this phase, a project team is formed to start constructing an ERP project plan. This plan serves as a guide throughout the rest of the project. Initial meetings also occur and documentation will develop as the team works to identify current issues and potential solutions. The next phase of the ERP implementation is the design. In this, a detailed process flow is prepared based on the information gathered by implementation partner from core users and process owners. They basically analyze the inputs. Then this include few steps like analyzing inputs, processing, and outputs of existing or proposed system. They break down the user requirement into specifics such as support for a particular inventory valuation method or costing technique, define functional specification to accomplish business goals. They also analysis how much is the configuration is required, how much is the customization is required from the standard ERP system. The next phase is the development. In this phase, implementation partner configures the ERP, or maybe he basically write the code into the ERP as per the design approved by the company in phase 2, which is the design. So this covers changes from standard version of ERP as per the company's requirement. The next fourth, which is very important phase, is the testing. This is the very important phase. As the name suggests, developments configured in ERP system by partner got tested in this phase by core users to review whether the outcome is same which was agreed in design phase. Any deviation identified are informed to partner for rectification, and simultaneously training is provided to end users. This is the formal document is called as user acceptance testing, which is UAT, is signed off during this phase by the project team, which is a successful outcome of this phase, that whatever configuration is done by the partner is thoroughly tested, tried and tested, and it is meeting the purpose, which was agreed initially in the design phase. The second last step is the deployment. In this phase, data such as accounting, inventory, open contracts at cutoff date, which is basically the date when you are moving from a legacy system to the new system, is uploaded into ERP system and transactions started way forward. We also call this phase as a go live. The last phase is the support. So post go live support is very important as it requires real-time resolution of issues for uninterrupted operations. At last, would like to emphasize that regular involvement of project manager and close monitoring is required to prevent scope creep, wherein scope creep is basically risk for a ERP implementation software, wherein the stockholders adding unnecessary requirements. Or another term is another risk is the gold plating, wherein programmers who is basically our implementation partner keep adding unasked activities. It is also important that proper approval mechanism should be implemented for entertaining any change request given by core and end users. It will help us to safeguard against this scope creep and gold plating.
So thanks for that, Dinesh. I like the structured approach because many times you need always a framework to hang your thoughts on. So thanks for very eloquently mentioning very step-by-step approach. Many times we go helter-skelter into implementation and seldom works. So it's good that you have laid down the framework for us to take note of and ensure that things are driven in a very planned, action-oriented, impact-oriented fashion. So thanks for sharing that. And I'm looking at the time. I know it's been a very nice, good 3 hours. We started on time. I would have loved to end it on time. And hence, I would like to conclude at least the panel for now. And briefly summarize, I think we started off looking at the larger industry context. Clearly, digital is changing the way businesses are operated, and clearly we see that industry boundaries are blurring, and it's important as functional leaders, you always take a industry agnostic view given this larger transformation and disruption that is brought by digital. Have a view on the regulation, but at the same time look at the firm's value enhancement, as Professor Alok mentioned. Elevate the function of internal audit to play a much more strategic role, because today we do find that large part of the time, as Professor Alok mentioned, is spent on downstream. But in order to do that, it's important to leverage technology so that you're able to let the machines handle the repetitive manual nature so that you get the time and bandwidth to elevate yourself as a partner to the business, as a partner to the board. And last but not the least, as Shiv clearly mentioned, and Harpreet too, it's all the mindset. So if you have the right mindset, the organization adopts the right mindset of transparency, mindset of process orientation, and have a very structured approach, structured plan, as Dinesh so very well concluded. I think we definitely can leverage the best of technology to transform this function. And I hope that all of you got a good view of the art of possible from the top academicians in this panel. At the same time, got a reality check in terms of how practically, from a practitioner's viewpoint, the opportunities can be implemented in the context of the business, context of the regulation. So I definitely learned a lot. So thanks once again to the fantastic panel that has been put together. And we could possibly take a few questions which have come up and then hand it over to Mr. Nanda to share his perspective and share a few words with all of us before we wrap up. So thanks. It was absolute pleasure moderating this panel.
So we would like to move forward to the Q&A sessions. We have only one question from CA Mahesh Krishna. How far has the maturity level of GRC process and framework implementation improved, and its technology advancements in its implementation in the digital era? So I would like any of the panel members.
I would like to answer because this is a very pertinent question. Ladies and gentlemen, times have advanced, and with it, the practices have always grown at a larger perspective. I remember when audit was simply a post-mortem of what was happening. And from there, we graduated, internal audit came in, forensic audit came in. Then we started and building SOPs and started validating them. And today, with the help of technology, we are doing wonders. So it is a constant growth, which is ultimately resonating the thought process of people to work in right tandem. So, ladies and gentlemen, my view is that times have encouraged the best practices to work in the right direction. I would request the panelists also to add their views, please.
Thank you, Nanda sir.
Yeah.
Thank you, Nanda sir. So before handing it over to Nanda sir for the concluding remarks, I would quickly introduce Nanda sir to all the panel members and the online attendees that we have.
It has to be very quick because we have.
Sir, sure, sir.
Yes.
Yeah, sir. So, sir, I would like to welcome you, the chairman of Internal Audit Standard Board of ICAI, CA Charanjot Singh Nanda. Nanda sir is a Central Council member of 25th Council of the ICAI, and also vice chairman of Banking, Financial Services and Insurance Committees. He was the member of the Quality Review Board set up by the Government of India, was Central Council member from 2004 to 2016. He was the chairman of the Committee of Internal Audit and also the chairman of the Committee for Members in Industry of the Institute of Chartered Accountants of India. He was the chairman of Women Members Empowerment Committee, vice chairman of Committee on Public Finance and Government Accounting, and many more accomplishments. So, Nanda sir, I would like you to invite for the keynote and the concluding remarks for this session, sir.
Thank you, Shesh. So, very good evening, ladies and gentlemen. It was indeed a great session. Compliance and audit in the digital era, opportunities and challenges. I would take this opportunity to thank all my participants very wholeheartedly. Professor Alok Pandey, who's the Dean of GD Goenka University, CA Shiv Gupta, Director of Finance, Asia Pacific Apply Board, CA Dinesh Bansal, Group Head, Audit and Corporate Strategy, East India Udyog Limited, CA Harpreet Singh, who's the President and Credit Head, Yes Bank Limited, and the person whom I listen the most, Mr. Krishnan, SVP and Global Head, Tech Mahindra. So, ladies and gentlemen, the session was fantabulous. In fact, I was traveling, I was coming back from Hyderabad. But when I came down, I saw so many feedbacks from so many participants praising the session and saying that we need more such sessions in times to come. So, ladies and gentlemen, what I want to suggest that you all please advise us what type of sessions you want. I am thankful to Mr. Harpreet Singh, who ultimately thought of this session, put it in the right perspective, and the session could see the light of the day. I will not take much of time. I would just emphasize this technology is something which will ultimately change the entire landscape. Technology gives us three very important benefits. Number one, you don't work on samples, the whole data is taken care of. Number two, computers don't have their wives. Therefore, no monotonous work, no holidays. They finish the work on time. And third and most important thing, the errors are minimal. So for compliance, technology is a boom. And we all have to ensure that we use technology and see that human mind and intelligence is used only for data analytics rather than doing the clerical job. I'm thankful to all the participants, to all my great panelists who put on their best. So, ladies and gentlemen, looking forward to have many such programs in times to come. And I want to tell you, a gentleman told me last week in Mumbai, I was in Mumbai, कि हमारा काम नाशुक्रा है. तो मैं चलते चलते एक शेर के साथ अपनी बात को खत्म करूंगा. The couplet says, तारीफ की चाहत तो नाकाम लोगों की फितरत है. तारीफ की चाहत तो नाकाम लोगों की फितरत है. काबिल लोगों के तो दुश्मन भी कायल होते हैं. We are that class of people. The enemies of ours would always respect our competence and our intelligence. Thank you so much, panelists. I'm really, really overwhelmed in welcoming you. We shall all remain together and do number of programs in times to come. Thank you. Thank you so much.
Thank you, sir.
Thank you, Mr. Nanda.
Thank you so
Great,
much, sir.
great.
Thanks, everyone.
And thanks to all our participants, 9, 6, and all are there, glued to their sets. It's really great. This speaks very high about the level with which the speakers of the day have kept them glued in. Thank you. Thank you so much.
Thank you, sir.
Bye. Bye.
Bye,
Bye.
sir.
Thank you.
Thank you.